Just new to our group, welcome to the opening playbook. Our mission here is to be a bridge for new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The opening playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm, try to trade without emotion involved in your decisions, go at your own pace, don't try to keep up with us or other traders, and ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now, this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh. Sharks are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. Every move counts in the game they play. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. no spinning around. With every trade, they set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Wednesday, May 13th. Happy Home Day! Hope everyone's having a good Wednesday so far. We will have Nathan here momentarily, and special guest Roger Scott will be here with us as well. Good morning, Nate.
Good morning. Sorry, as always, I'm kind of scrambling to get from my members meeting over here to get us kicked off for opening playbook. How's
all
everyone
good.
doing? We
So far, so good.
we have a massive pullback in the market, 0.18%. It's everything is falling apart. Or at least that's kind of what it feels like when you get so zoomed in and expect every single bar to be green. And we have a just tiny blip in the radar. It's funny. Yesterday, you guys will remember, people said, "Oh no, the market's pulling back. We're getting a correction here." Yesterday, I said, "Well, we haven't even had a pullback yet, let alone a correction." It was a very small blip in the radar, but let's be careful and not get too zoomed in, where we start getting every red candle is the end of the world, or every green candle means leverage your whole portfolio for the next call option. Like I tell you guys, zoom out to those weekly charts, zoom out to those monthly charts, give yourself some context for what's actually happening, and not kind of panicking from one move to the next on a day-by-day basis. So today we got a little bit of red out there, but it's pretty minor. Where's the SPY at right now? 0.13%, so very, very minor right now. And that is, of course, on the back of a really positive overnight drift that turned negative because of some of the inflation news and otherwise. So I think right now, Roger, actually, you might have summarized this in our company Slack. We've got the Qs at the highest overextended rate in X amount of decades. We've got inflation piling on. We've got layoffs likely going to hit one of the highest levels in 2026 ever for the top companies, and the market is sprinting higher. So what's it's like the what's the cat with the fire around him? Everything is fine. Garfield. It's like the Garfield meme,
Garfield.
right?
Garfield, yes.
But as we know, the Garfield meme can continue because people, as I remind people, they said this in mid-2020 as the market ripped higher. They said, "Oh, it doesn't make any sense. It's gone too high, etc." And then 3 months later, they said the same thing. And 6 months later, and all of 2021, people said this doesn't make any sense. But if you were shorting the market in 2021, good luck. So we have to be cognizant that even when it doesn't make sense, that's not enough of a reason to short it on its own. Now, I am very much looking forward, Roger, to your perspective here, because as soon as I do 2 minutes of overview, I think you're going to get into some of what you called the high flyers, which I can't imagine a better environment for high flyers than the momentum environment that we're in right now. So I'm very much looking forward to that. Someone mentioned NVIDIA hanging in there. Yeah, NVIDIA and some of the kind of less sexy tech stocks relative to your Microns and your SanDisk and your AMD are actually holding up better over the last 2 days when we got a little bit of pushing back against tech. And you can actually see, if you're looking at my screen right now, mags are positive. So thanks to Nvidia and a few others, we actually have the mags positive. But I do think it's worth noting RSP continuing to underperform. So what you would often see, folks, when the SPY and the Qs are sprinting higher, you'll see RSP lagging behind. RSP is the equal weighted SPY. Then what you would typically see is after our SPY and QQQ sprint higher, when they kind of settle down or have a little pullback, then what you'll see is the RSP outperform. It'll go green on those days. Well, what we're seeing is that even when the Qs and the SPY kind of chill out or have a slightly negative start to the day like we have now, instead of RSP outperforming, it's actually even more negative. And so we're seeing that outsized, kind of technology weight show up even on some of the calmer days, which just tells you how insane the overperformance of technology and risk-on sectors have been right now. So, for example, you can see here, yes, technology is red. Yes, discretionary is red. Yes, staples, which are defensive, are green, but you're not getting a massive flip to the other side. As a matter of fact, if I show it to you on this screen, you can see it really clearly. Let me just show you. This is the sector comparison here of technology and just how extreme the outperformance is. So this is over the last month, where the gap of XLK, which is our technology sector, relative to everything else, is getting, as stretched out as we've literally ever seen. If I scroll back, it actually just gets even a little more extreme here. If I go back to the beginning of April, SPY up beautifully at 14%. Why is SPY up 14%? Not because all of these sectors are supporting it, because they're all underperforming the SPY. Everyone see this? We're not seeing SPY pushed up because communications, staples, healthcare, utilities, industrials are pushing it up. We're seeing the XLK technology drag it up higher, and everything else underperform that. So I think we just have to be very careful about what is actual the makeup of this underlying market. And of course, that's why if I add QQQ into the mix, you'll see the QQQ right here even higher, massively outperforming all of the contributing sectors other than technology. So this is about as top heavy as a market as you will ever see right now, with the disproportionate performance of Qs relative to SPY, and then technology even relative to the Qs. And I think it sets the stage, in my opinion, quite well for what Roger's going to talk about, which are some of the kind of smaller, massively outperforming stocks in terms of momentum in this super risk-on environment. So, Roger, very curious to see what you have to say. And by the way, folks, if you took Alibaba, I was in a meeting and totally missed our exit on Alibaba. So hopefully you guys exited based on the underlying, which is right near the open at 135. If not, you're still profitable, but not as profitable as if you took the appropriate exit that I missed right at 135. So just keep an eye on that one if you're still in it, looking for it to maybe come back a dollar or two here and get a little better exit on Alibaba.
All right. Nate, is this a good time for me to start?
Oh, just run away with it, Roger.
I don't have the chat open, so I can't really see who's talking. So I just want to make sure it was okay. Thank you thank you for having me on here. I'm kind of multitasking. I'm taking a diagonal on weekly cash flow. I've been doing these diagonal trades where we sell the near-term option and we buy an option like a strike price or two lower that's expiring in like a month or two. And we use that as a hedge. So we let the short premium expire. Basically, we're selling ICE and we're buying a stake. And the stake is still frozen while the ICE expires, but the stake is a hedge for the piece of ICE. Just did pretty good on a weekly cash flow trade. All right. Do you mind if I talk a little bit about the market before I get into the high flyers?
No, absolutely. I just figured, as you get into the high flyers, it's especially applicable for the amount of momentum that we're seeing in the market right now. So I'm going to be especially fascinated. But absolutely, take it top down.
I just want to take a few minutes and here. Add.
Before you dig into that, let me just give you a heads up, Roger. I'm going to be here for a couple more minutes and then disappearing. Blake's going to be coming in to take over in a couple minutes.
Well, it's good to see you, David. Good morning
Yeah,
to you.
You too, sir.
Always get to see David. He always has a smile on his face. All right, folks. Let me just share my screen real quick. Let me just share my screen, and I want to get into it with you guys. So as far as the overall market is concerned, real quick. And again, thank you for being here. I don't have the chat open, which is probably for the best. So so you guys just welcome and good morning, and thank you for allowing me to be here. All right, this is the daily chart of the SPY. This is the intraday chart of the SPY. As you can see here, we're kind of just tethering along, going sideways here. And I'm not loving this price action too much because of the RSP, because RSP has been just going sideways. It's been going absolutely nowhere. And this is really the market when you take the market cap away, which is something that folks should be doing, okay? You always want to take a look when the market cap is not there, because this will give you a really much better idea of what's going on. One of the things that I mentioned this morning, and I'll show you right now, I think this is what Nate was talking about, and this is pretty important, actually. It's actually really important, is the momentum levels. And when you look at momentum levels right now, I want you guys to see this. You've got 48%. It was 49 this morning. Now it's 48%. You got 40. You have less than 50% of the market trading above the 200-day moving average. Now you're probably thinking, well, Roger, why are you showing us the Russell 1000? Well, the Russell 1000 has all the S&P and the Nasdaq stocks in it. This is the large cap index. So this is actually a really good representation of what large cap stocks are doing right now. If you want to look at the QQQ, you've got 43% of stocks trading below the 200-day moving average. Now, normally that wouldn't be a big deal, but this is something that Chris Pulver posted above, and I think this is really eye-opening. If you look at this now, think about this. Put this together. Take this right here. So you've got Nasdaq 100. This is price action. We're the furthest away. This is just percentage away from the 50-day moving average. Look at where we are right now. Okay, we're at the highest level we've been since 2009. Now, if that's backed up by something, like let's say that 90% of tech stocks and everything else is moving fine, there's nothing really wrong with that. Let me just switch my price to the SPY so I can keep an eye on the market. Okay, nothing would be wrong with that. But the problem is you've got you don't have anything to back you up. You have almost 50% or 43% of the index trading below the 200-day moving average. That leaves a lot of vulnerability for the market. Okay, that's one. Number two, consumer discretionary, folks. This is really bad. You now have 17% of the consumer's discretionary trading above the 50-day moving average, and you have 29% of discretionary trading above the 200-day moving average. Now, folks, I want to show you this, and I'll actually be talking about this quite a lot in the VIP room later today. But take a look at retail. This is the retail sector right here. This is the daily chart of retail, okay? Now, does that look to you like we're in a bullish market? No. See that right there? See that right there? That's not good. XLY, look at where we are with XLY. Have we rallied at all in XLY the last couple of weeks? No, not at all. Very little. Very little. There's not much there. So, and financials, look at financials, Nate. Look at this. We can't even get above the 200-day moving average.
Yeah, so, I know. I keep wanting to buy financials, but they can't get going at all. They should be participating far better in an all-time high market environment. But like I showed at the beginning, nothing's really participating. The SPY is beating every single sector except for technology. So technology is just dragging it above all of the underperforming sectors.
Yeah. Yeah, so it's you have a very, very lopsided market. And I keep telling my friend and folks, if you're also in my programs, then this may not be as new for you, but things are just not looking great. If you take away the SMH, if you take this away, you take this away and you take away the QQQ, and most of the rallies in the hard tech, it creates a major, major problem for us. A major, 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 major problem for us. A major, major problem for us. Okay. So I don't remember the market being this extended with this much vulnerability in a very, very long time. In a very, very long time. And folks, if you have any questions, just ask. I'm sure Nate will post them for me or whatnot. I'm not seeing the questions. I'm not looking at it right now. I just want to focus on this. Now, one of the reasons why I launched the small cap, sorry about that. One of the biggest reasons why I launched the small cap service is so that we don't have this correlation. You see, small cap stocks don't have nearly as much exposure to the market as large cap stocks do. Why is that? The reason for that is because they don't have institutional sponsorship, and most importantly, they don't have algos. Why? They're too small. Let me give you guys a really good example. Okay, this is a really, really good example. If you take a tennis ball, okay, and you take a tennis ball and you hit it with a tennis racket, it may go 5-10 feet, I don't know, whatever. Now take a little table tennis ball, those little balls like this that like they're just like you put them down and they bounce like there's no tomorrow, and you take that with a paddle and you hit it, it's going to go like 30, 40, 50 feet because they're light and there's nothing there. So institutions can't play. Institutions. One second, I just have to tell Matt something. Okay, sorry about that. So you don't have that. So it's very, very hard for institutions to play table tennis because they're serving really, really hard. Okay. They're serving really, really hard. So what happens is when they try to play table tennis, things just get out of whack. And the ball goes 50 feet in the air. They can't do it. Imagine, like, let me give you a stock that was on my list today. Imagine a stock like this stock right here, FCHL, okay? Like this stock right here. Look at the average volume on the stock before today. The average volume is 1.6 million. 1.6 million. Or look at this stock right here. Just to give you, I'm just kind of giving you some ideas. Or this stock right here, WHWK. Take a look at this stock, okay? See, volume today is really, really high, but look at volume usually, 162,000, okay? So how can an institution get involved in a stock that has 400, 500? The average volume before today is about, here, let's go take a look. It's about 258,000 a day. How can an institution buy a stock that has that kind of volume? Okay. How can an institution trade that kind of stock with volume? It can't. So institutions and algos completely avoid these stocks, which means they're driven completely by catalysts. Okay. Very, 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 very important. Now, let me show you something interesting. Now, take a look. Let's just stay with this stock here for now, okay? Let's just stay with this stock. This stock at one point was a $40 stock. Here it was a $34 stock. Here it was a $26 stock. You may or may not have noticed the stock has been going down, 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 and finally it's starting to turn over again. Now, I want you to ask yourself, and I'm serious, I want you to ask yourself, okay? How many bag holders, and again, I don't have the chat open, but think about this. Think about all the bag holders that bought leading up here and are now waiting for this price to come back here to these levels, to these levels, to these levels, to that level, to that level. There's a lot of bag holders. As a matter of fact, everybody who bought this stock, everybody, when I say everybody, I mean everybody who bought this stock anywhere, over the last up to about 2024 is just sitting and waiting for the stock to go up so they can take money out of the stock. Now, so you've got a bunch of people who are bag holders here, and they're just sitting and sitting and sitting. And they're now at the point where they're like, look, I'd love to take $5 or $10 out of this stock. They're probably going, oh my God, this stock hasn't been at this price since, 2024 and like 2020. This is like Kathy Woods, like this is like a big, big deal here. Okay. All right. So this is the stock is trying to turn around, and all of these folks who are bag holders, what are they going to do? See these folks right here? They're sitting there going, come on, baby, come to $8. I want to take profit on this. I want to take profit on this. I want to take profit. And what happens is it makes it hard for the stock to go up. Conversely, while this stock has been going down, you have a whole bunch of retail traders who are shorting this stock. And what do you think happens when volume goes from 200 something thousand to 3.3 million? Okay. That's a huge, that's a big problem. Actually, I'm going to open up the chat so I could see you guys' reactions. I just opened up the chat. Here, Roger Scott. I've never opened up the chat here before. All right, there you guys are. You guys are giving me feedback. Good. Excellent. Good morning, everybody. Let me put here. Morning, everyone. Glad to join the chat. Okay. So, and you don't need options for these stocks. Like, look at this stock. It's a $4 stock. Another stock that was on our list. Like VSTS. Look at these stocks. $11 stock. Look at the volume here. 1.6 million. Look at this. And then look at it yesterday. So we're looking for stocks. That we're completely looking for stocks that are doing something they haven't done in a very long time. And we're looking for stocks like this that are turning around, that are starting to turn around. In other words, they're not in deceleration anymore. They're not seeing as much selling pressure. So one of the things that I look for in a stock is I want the volume to be the highest volume over the last 2 years minimum. Now, why do I use 2 years? To be honest with you, it doesn't really matter. I could use 3 years or 4 years or 5 years. The reason I'm looking for 2 years is I'm really looking for the highest volume the stock has ever had. That's usually what I'm up against, because usually if you can go back 2 years and you can't find higher volume, you're going to end up being with the highest volume day ever. Not always, but usually. Now, again, look at this stock. July of 2025, it had a big move. Remember, today's day is not over yet. But again, I'm looking for a big move, like a real big move that the stock hasn't had. And if the stock had a big move while it was selling off, that doesn't count because the stock is now coming up. You see, you have a lot of people here who've been waiting a very long time for this stock to start coming up. So you're going to have a lot of bag holders, and you're going to have a lot of short squeezes. So that's what we're really looking for here, is a short squeeze. Now, when these stocks come out with news, like, to give you an example, just to kind of give you an example of the last one. 1 second. Okay, like this stock right here. Let me give you an example. So let's just take a quick look. Quick look. Ticker WALK. Okay. WALK Medical. Let's look at news. 13 hours ago. Why did WALK skyrocket nearly 300% in 2 days? Okay. Here's why stock surge spiked, and there's a reason for it. There's a reason for it. Okay, regulatory setback dominates sentiment. You could see it right here. Usually, typically. Let me do another one real quick. QUCI. Okay, QUCI right here. So look at this. They got a drone licensing deal. Okay, they got a drone licensing deal. Usually, the kind of news these stocks have usually is the biggest type of news they've ever had. So now imagine this. Okay, imagine this. You're short this stock. You've been short this stock for a couple of years. You're short. You're making money. Now the stock is starting to go up, and the stock has the best news it's ever had. You're probably going to get squeezed out. Now, and here's QUCI, for example. You could see what I'm talking about right here. Biggest, look at the last time the stock had news like this. Look. So look at this. Never. What's the average volume on this stock? So get this. 3.8 million, right? I mean, excuse me. The average volume is 3.4 million. The volume today is 203 million. Do you guys understand the kind of moves I'm looking for? Hey, Jason, Mitch, MCP, John, Patricia, Mortimer, Deb. Good morning, everybody. Good morning. So I'm looking for a stock, okay? I'm looking for a stock to have the biggest one-day move ever. Now, one thing I always tell you folks, and you may want to write this down, superseding intervening news cuts off any technical price action. Okay. Now, I know most of you are not attorneys, and I know most of you didn't go to law school, but if you went to law school, there's a very famous case. It's called the Palsgraf case. And it's about intervening, superseding things. So, and basically what it says is if something is going on and something supersedes, and if it's strong enough, it's going to overcome whatever is happening. So to give you a real simple example, let's say that let's say a stock comes out with good earnings, okay? But there's a war that day, okay? That war is going to supersede anything that's coming out on that stock in terms of earnings, okay? Very, very, very important. Very, 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 very important, okay? So news always beats technicals. News always supersedes whatever's happening. That's why I always say technicals are very powerful, but anytime you have a news catalyst, that news catalyst will supersede and it'll intervene and supersede anything that's known. So market moving news always intervene and supersede technical price action, as long as the news is relevant to that stock and what's happening. Because you see, my friends, stocks, I know that most of you don't realize this, but stocks are completely random outside of news. They don't have a lot of things moving them. So the only thing you have is an equilibrium of buyers and sellers that gets out of whack, especially with these small cap stocks. Remember, you don't have any institutional driving price up or down. So that puts you at a pickle. So let me give you an example. Let me give you the stocks that are on my watch list this morning. I think I gave 2 or 3. None of them have hit yet. But let me show you what I'm watching this morning. I mean, I don't see any downside in doing that. So I'm not going to give you my entry levels, and nothing has hit yet. But here's one, OCG. Here's one stock. So you could see the volume in the stock. Look at the volume of this stock. This is a stock that's on our watch list today. We have a buy stop working right now, okay? Look at the volume. So what's the average volume? 1.6 million. The average volume is the volume today is 22 million. My friends, it's 10:28 in the morning. Tom, I'm answering your question right now. We haven't traded anything yet. It's just a setup. It has to go above the high. But this stock has had 22 million, and the average volume is 1.1 or 2 million, 1.3, just a little bit over 1 million. 22 higher volume, and the market just opened an hour ago. Okay. If we look at a catalyst for this stock, which we're going to do right now, OCG stock, news. Let's see what kind of news it had. All right, let's see what kind of news it had. Let's just take a quick look, okay? Stock has been trading up 33%, sharp spike, Cultural Holdings, company 5 years by giving shareholders cash dividends. Oh, they gave dividends. Okay, well, no, that's old report. 1 day ago. Let's see what's going on. Roughly from 60 cents to $2.40. Let's see. I don't even see what news came out. Cheap trade. Anyway, but you could see the kind of catalysts we're talking about. There's something going on with this stock. So this is one of them. Let me give you a few of them, okay? So this is one that I have on our watch list, and this is the other one I have on our watch list, AEHL. Okay. Now, this is something I need to explain to you. Oh, yeah. Minimum of 5 to 6 times relative volume, at least, usually 10 times. Now, let me show you something. I don't just pick stocks that have their highest volume day. I pick stocks that have their highest volume day, and I watch them for 5 days. So we have 3 kind of setups that we do. Okay. Let me explain to you the type of setups we do. We do our initial setups. Let me just let my folks know something. Short. Just heads up. Okay. Just keeping my folks updated on what's going on here. Okay. So we keep an eye on a stock for 5 days. So I look at the original catalyst, and then I look for follow through for 5 days, because usually stocks are inactive. That's probably a good word, active, for about 5 days following the catalyst. So here's my rule, okay? On the day of the catalyst, I want to see the pre-market high being broken. Okay, if the pre-market high on the day of the catalyst is not being broken, like this is a perfect example, actually. See this stock, OCG? So look at the overnight. So here, let me show you overnight levels. See, OCG, this is overnight. This is my screen that I look for it. Now, look over here. This is the overnight price action right here, right? Notice we haven't been able to break it, so we don't do anything on this stock. Now, let's say that stock keeps rallying like this stock is afterwards. After the first day, I don't look at the pre-market high. I look at the market high, because the catalyst already came out. So I want the stock to trade above the market high. So the first catalyst is, can we get above the pre-market high? If not, I keep that stock on my watch list for 4 to 5 days to see if it could take out the market high. Okay. So this catalyst for me right here is not just a catalyst that I need to get into that stock that day. If that stock doesn't get hit that day, I keep it on my radar for 4 to 5 more days to make sure that it takes out the daily high, not the pre-market. So this catalyst gives us 2 things. It tells us we need to trade the stock above the pre-market high on the day of the breakout, and then for the next 4 to 5 days, we could trade that stock above the market high if it's a catalyst, okay? Because again, there's stuff going on all the time on these stocks, okay? All the time on these stocks. So again, you're trading a stock that has a news catalyst, okay? You're trading a stock that has absolutely no correlation to the market. I mean, look at this, okay? Look, this is the market, okay? This is AEHL. What correlation does it have to the market? Zero correlation. And we're also watching this stock too. This is just on my watch list, this stock right here. QUCY. This is just on my watch list. Okay. And again, look at the volume here. 8 million average volume, right? 9 million, 200 million. So again, folks, we're looking for stocks that are making a lifetime move. So think about that for a second. Imagine you're always trading stocks that are making the biggest move or having the biggest news they've had ever, or at least the last 2 years. And you could see here, think about this, average volume, that's a big move. That's a huge move to go from 8 million to 200 million, and it's only 10:30 in the morning. So then here's what I do. I go to this screen right here, and let's just use this. Let's use this stock right here, okay? Let's use this stock right here. So what I do is I look for the 15 minutes before the opening bell, and I take this area right here. I take a flag, the 15-minute flag right here. Here, let me man, this is a pain in the ass to work with. Oh, here it is. Okay, here it is. Okay. So you see this right here? This is the 15-minute flag. See how it flagged? It's been flagging for 15 minutes. What I do is this. I duplicate it, and then I put it on top, okay? Just like this. That becomes my entry right here, if it goes above this line, and that becomes my profit target. And this is my stop loss, originally. So when I place the trade on AEH, so right here, when we place the trade on AEHL, we have our buy stop, we have our stop loss, and we have our profit target. Okay? Very, 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 very simple. All of that is there for you. I have a lot of guidelines. So what I usually do is this. I keep duplicating this, and I keep adding it on top. See, it's very important for me to get that flag, that 15-minute flag, using 15-minute charts, because that's how I get my stop. So this would be my entry. Here, let me. Hold on. Here. This would be my entry. This would be my first profit target, and if I see it has more follow through, that would be my second profit target. And my stop loss would be right here. Now, after I'm in the trade, now let's say we get clipped right here. Okay, we're long now, but we haven't hit our profit target. I go to the 1 minute chart. I go to the 1 minute chart. Now I'm going to have to, I can't show you an example on a chart right now, but I'm going to show you an example. I'm going to make believe example. So what I do is, let's say we're now in a trade, okay? And let's say this is our consolidates, and let's say this is our entry right here, okay? Let's say that is our entry right there, okay? Okay. I then switch to the 1 minute chart. Now, let's just say our profit target is right here, okay? Profit target 1, profit target 2, okay? And let's say our stop loss is right here, okay? So here's our entry, here's profit 1, profit 2, and here's our stop loss. And we have it all laid out, okay? Okay. I usually don't even give you profit target 2 until after we hit profit target 1, if I think we have more to go. And usually we don't, but that's with this environment we're in right now. And what I do is I look at overhead resistance. I look at level 2 to see how much vacation. Sorry, I'm Roxanne. You're on vacation in France. Congratulations. And good morning or good evening over there. So let me show you something cool. So now that we're in the trade, we're here, right? Where do we, and we have our stop loss right here. This is the part that I really need you guys to understand. This is going to be really, really important, okay? So our stop loss is here. Our profit target is here. We have a 1, 2, 1. In other words, our profit target and our stop loss at the same level. But our profit target isn't up here, and now we're in the trade. So what do I do? So let's say price is moving like this, okay? So what I do is I'm looking at the 1 minute chart, and as price goes up, so price goes like this, right? See how it goes up like a staircase. I trail my stop loss from here, up here, up here, up here as it goes up. What does that do? Well, let me show you what that does. So look, our entry's right here, right? Remember, our box goes above and below, right? So we have equal 50-50, right? But then we're in the trade. So we size our trades based on this risk, right? And this profit, which is 1-to-1. Okay? You too, Roxanne. We size them 1-to-1, right? So our risk to reward is even. Then once we're in the trade and the trade starts working out, we trail it by tightening it. But wait, our position size is based on our original stop loss, right? So watch this. So look at what happens. So let me show you how it all works out. Folks, are you getting value out of this? Is this beneficial to you? Are you learning something new? Give me some feedback. I have the chat open. You can give me some feedback now. I don't even know how many people we have in the room. So look, you want to buy a stock. Here's your entry right here. All right, here's your entry. You take a box like this, you put it on top. Here's your profit target. You take a box here. Here's your stop loss, okay? Entry, stop loss, profit target. Okay, now watch this. Watch this. This is the cool part. This is the cool part, folks. This is the really cool part. So let's say the distance between here and here is 50 cents, okay? Watch this. Watch this. It's 50 cents, okay? Your entry here, you can calculate your entry immediately because look, you have your buy stop, your stop loss, and profit target, okay? So you know exactly, thank you, Eagle Beagle. So you know exactly how many, you know exactly where your stop loss is. So let's just, I'm going to make this easy for you guys, real simple. Let me just pull up Amazon, see what it's doing. It's not doing anything. I'm pissed off at Amazon. All right. So let's say that our entry's here and we want to risk 50 cents. Okay, great. How much dollars do you want to risk on this trade? Okay. Give me a number. Give me a number. I'm going to show you guys something really cool. Give me a number. How much dollars do you want to risk on this trade? Just throw out a dollar number. Jack says $500. Okay. That's 1,000 shares. Hart says $5. Okay. No problem. That's 10 shares. Nelly says $100. That's 200 shares. Do you guys see what I'm doing? Somebody wants to trade this position with $5 and somebody wants to trade this position with $500 risk. Stacy wants to trade with 1,000 risk. That's 2,000 shares. Do you guys see what I'm doing? So I just showed you how to trade this with 5 shares and I just showed you how to trade this with 1,000 shares. See, we know our stop loss. Our stop loss is 50 cents. So now that we know what our stop loss is, we can literally figure, and our stop loss only goes up in our favor. So in other words, that's your max loss. So, and folks, this is really important, whether you buy anything from me or not. So please listen to what I'm saying right now. I'm going to open up America for you, as they say. A lot of folks don't want to take stop losses. Okay? 1 second. Sorry about that. Okay. Matt doesn't know I'm here, so I needed to tell him that I'm here. Okay, look. So this is a very important point that I want to make, and this applies to no matter what you trade. This doesn't just apply to me and my program. This applies to you and everything you trade. So somebody wants to trade $5 with this, which is fine. That's where I would start. So if your risk is 50 cents, okay? If I do 5 shares, all I have to do is divide 5 by 50 cents, and I'm going to get $10. That's how many shares I trade. Now let's say somebody wants to trade 1,000 shares. Well, if you divide 50 cents into 1,000, you're going to get 2,000. So that's 2,000 shares. So the person, so 3 Hearts wants to risk $5, and who was the person who wanted to risk $1,000? And somebody wanted to risk $1,000. Or let's just say 500. And Keith wanted to risk $500. You could do that. What? Yes, I'm showing you how you could use the same trade and you can risk $5 and you can risk $500. The guy risking $5 would just buy 10 shares. The guy risking $1,000 would buy 2,000 shares. The guy risking $500 would buy 1,000 shares. Do you guys understand? John says how to get the number of shares by dividing my risk by the amount of money you're willing to lose, John. Capiche? See, I'm showing you something completely different. See, I've learned over the years that a lot of times, let's say you buy options, okay? Let's say you buy options and you buy $2,000 worth of options. And I ask you, how much do you want to risk on your trade? Well, in the back of your mind, you want to risk 500, but you're not going to say 500. You're going to say, well, 2,000. What if this thing goes to zero tomorrow? Remember, you're day trading here, so there's no gaps. Okay. So a lot of times, let's say your option position goes against you $1,000. I only wanted to risk 500. I'm going to wait for it to go back up. Ooh. Okay, so you didn't really accept that risk that you're taking. Here, you can actually know exactly or within a couple of dollars of what you're going to be risking. To give you an example, our spreadsheet in the members area, I risk everything. I risk every trade to $500. It's a binary number. It's an arbitrary number. I could risk it to 5,000, all that stuff. Okay, all that stuff. Okay, so we know exactly what we're going to risk on a trade. Chris says, wait, Roger, these aren't the most transparent stocks. Won't the market makers see these stops on the books and come down and stop you out? Chris, what market makers? These are penny stocks. These are only retail traders trading them. There's no algos to take it down and stop me there. It's me against you. It's us against us, not against market makers. Also, remember, I'm trading the stock when it has the highest volume it ever had in history. Do you think we're going to mess with a stock? We're going to be able to manipulate a stock that has 200 million shares traded that day? I don't think so. It's never happened yet. So please listen to what I'm saying right now. Instead of me to listen, please, what I'm explaining to you, whether you know it or not, I'm probably explaining to you the most important thing you're going to learn in the next year. So listen to me, okay? Please listen to me. Don't interrupt me. Listen to me. One of the biggest problems you have, whether you know it yet or not, is you all have PTSD from trading. Every time you take a loss on a trade, it sits there in the back of your mind. And remember you guys remember the dinosaur lecture that I had a few weeks ago? Okay. Your emotions that resolve around trading are primal. It's the same things that we felt when dinosaurs were chasing us millions of years ago. It's the same reaction. You have all of that in the back of your mind. It's all completely subconscious. It prevents you from following your rules. That's the least of it, but it prevents you from following rules. When you know 100% exact dollar you're going to make or lose on a trade, it makes it much easier to follow the rules. If I tell you right now, if this trade goes against us, you're going to lose exactly $500, and not $600, not $800, but about $500. Oh, okay, I gotcha. It creates more certainty. So the way we adjust our stop loss is not by how much we want to risk on a trade. We take our stop loss, we take the difference between our entry and our stop loss, and we divide it by the dollar we want to put into the trade. Okay, you guys understand what I'm saying right now? Your risk divided by the money you want to place on. So we're not trying to figure out how much to spend. We're trying to figure out how many shares to buy to fit our risk criteria. It's the risk divided by, as I said before, risk divided by the dollar you want to put in a trade. So your risk is 50 cents, right, per trade. How much do you want to risk on that trade? $100? That's 200 shares. $300? That's 150 shares. Let's say your risk per trade is $1. How much do you want to risk on the trade? $100, 100 shares. $1,000, 1,000 shares. $2,000, 2,000 shares. So I do it very differently than you guys are used to seeing. Okay? I do it very differently than what you guys are used to seeing. Okay? Very, 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 very important. I don't just put $500 into a position and hope not to lose 300. We know exactly what we're going to lose, and we lose very close to that. If you look at my equity, you'll see 499, 498, 501. This is very important because it keeps your profit and loss together. But wait, there's more. And this is the part I need to explain to you. So watch. No, not just risk management, John. Asymmetric risk management. Let me show you. Let me show you. I hope you guys are getting value out of this. So let me show you. Let me show you a cool little trick. Okay, so going back to our example. Bev, there's sound. Everybody else can hear sound, right? You guys could hear me? Okay. All right, good. It was just Bev. All right, so let's go back to our example here. This is our entry, right? Right here. So here's our entry, here's our profit target, and here's our risk, equal. So here's what I'm doing. After I'm in the trade, and let's say we get clipped right here, okay? And the stock starts doing this. I will use the 1 minute chart to start raising my stop loss. But wait a minute, Roger, wait a minute. When you put on this trade, you created symmetrical risk reward. That means for every $500 we lose, assuming that's the number, or every $5 we lose if we do 10 shares, right? Because somebody here wants to be cheap, which is a good idea with 5 shares. 3 Hearts wants to be cheap with 5 shares. So here's our $5 risk right here, 10 shares, okay? And we have $10 upside. So 10 we can lose, 10 we win. Okay, so if our win rate is 50%, we just keep breaking even. Our win rate is not 50%, but if it is, but let me show you what I do. We already sized our trade, right? To lose $5 here and make $5 here, right? But now I take my stop loss and I move it from here to here. Then I take my stop loss and move it from here to here. Wait a minute. If I lose from here to here, it's $10. But if I lose from here to here, it's only $1.50. But my profit target is still $10. Capiche? You guys understand what I'm doing? So if the position goes against me, for me substantially, I start trailing my stop. So I start the position with an equal profit stop loss, right? But I move my stop loss higher to create asymmetric risk when we're in the position. So, for example, even if we had a 50-50 win rate, 50-50, I would still make money because I'm raising my stop loss. We have a way beyond 50% win rate. I'm just showing you an example. So what I'm doing is I'm creating a scenario before the market opens that gives you symmetrical risk, profit, loss, right? And then I'm keeping the shares the same. The shares don't change. And I'm raising it. And eventually, if the trade goes far enough up, our stop loss could be virtually 10 cents and our profit is still $10, assuming we use that $10 example as our risk. Again, I don't care if you're risking. So don't come to me and say, Roger, I only have $100. I can't trade this. I just showed you how you could trade this with $5. It's just 10 shares. As a matter of fact, this stock right here this morning, let's do the numbers on it, okay? Let's just do the numbers on it. 338 minus 283. Let's do the numbers, okay? So we got 338 minus 2, what was that number? 283. 283. Okay, let's just do the math here, okay? I don't scale anything out. Let's do this. We got 38 cents here and we got 17 cents here. 17 plus 38 is 55, okay? 55. Our risk on this trade is 55 cents. How much do you want to lose on this trade? Give me an example. You want to lose how about $550? How about that? Right? What is 55 into 550? It's 1,000. It's 1,000 shares. So if you want to risk $1,000, you would do if you want to risk $550, you would do 1,000 shares on this trade that hasn't hit yet this morning. It's still an active trade. But let's say you don't want to risk $550. Let's say you want to risk $5. Well, what's 55 divided into 5? It's like 8.5. You do 8 shares. So here I showed you how you could risk $550 on this trade, and I showed you how you could risk $5 on this trade. Capiche? What if you want to risk 5,500 on this trade? Then it's 10,000 shares. Let's say you want to risk $5.50 on this trade. Well, then it's 10 shares. Do you see how you're adjusting your position size based on how much you want to risk on the trade? It's very, very simple, and it works very well. And I highly recommend you do that with all of your programs where you have a stop loss that's a fixed size. So what have I done with this program? Let me explain to you what I've created. In a nutshell, I wanted to take away all of your problems. Okay? Okay, so let me show you something. Okay, so high flyers, okay? Do you need a big account? Here, let me just go back to where I was. Here, let me go back to where I was. Okay. One second. Okay. Okay. So let me go back to what I was talking about, okay? You don't have to, you entered the stop. Chaz, I want to ask you a question. Look at my example from this morning at 9:47. Does this stop loss included with the trade? Why did you just say, do you enter a stop loss after your trade? The stop loss is right there the moment I gave you a trade. Here's another one, stop loss profit target, right there. It's all right there when I give you a trade. Okay. Okay. It's always there. Okay. So do you need a big account to trade high flyers? You can start with $5 or with $5 million. Okay. No, you don't need a big account. Is there any correlation to the overall market? Zero. Driven completely by catalyst for at least 5 days from the time we get signal. Zero correlation to the market. Okay. Do we go short? No. Okay. No, we don't. Do we buy options? No. What's the typical cost of the trade? $2. Okay. So, do you need a big account? No. Can you trade with a $50 account if you wanted to get started in paper trade or short-term trade? Yes. Is there any correlation to the market? No. Do you go short? No. Do you trade options? No. How much is the average trade? Well, like look at today, $2, $4, $5. Do you really need options for that? How long are we in a typical trade? About 20 minutes. So, no large account needed. No correlation to the overall market. No going short. No buying options. Low cost for each trade. And in about 2 weeks, there won't be any restrictions to day trade. And catalyst has to be the biggest thing the stock has ever experienced in at least 2 years, but usually biggest catalyst in a lifetime. All entries, stops, adjustments posted in real time. I said 20 minutes, yes. Now, how have we done? If you started with $500, if you traded each position with $500, you would have been already 8 times your account since we started in January. 8 times. Okay, 8 times. Our profit factor on real trades, like 100 trades or near there, is 1.85, which means for every dollar you lose, you make 185 back, and there's usually a trade per day. Yesterday we had 2. I think we had 2. So, folks, let me ask you an interesting question. What's missing from this program? You got your entries, you got your stop loss, you got your profit target, you have a game plan, you have no options, no going short, you don't need a big account. I showed you how you could do this with $5 or $5 million per trade. Is there any questions for me? Do I have any questions? Do I have any questions? Any questions? Any questions? Doesn't look like we have any questions. That's it. No questions. We have over 300 people here and there's no questions for me. I find these stickers on my scan. I have a daily scan for them, and I'm probably going to be releasing that scan for sale over the next 6 months. This is High Flyers. The program is called High Flyers, and you guys are going to see a presentation on it in just a few minutes. Blake, are we ready to begin? Nathan, Blake, somebody?
Yes, sir.
Hey, Blake.
Hey, Roger. How are you?
Good. How are you?
I'm doing pretty good this morning. Glad to see you.
All right. I'm going to give you my screen, okay?
You got it.
All right, folks, you're going to see a presentation. You're going to see a presentation that I did on this High Flyers yesterday or the day before. And I want you guys to pay attention. If you have any questions, here's my email address. Roger, I find them for you, Roxanne. At Roger, don't try doing this on your own, not till the scanner comes out. Now, this is a presentation that I did with Gramster 2 days ago. I highly recommend you pay attention to this. This will explain everything for you, okay? And if you have any questions, it's roger@rogerscott.com, okay? That's my email. I posted it there for you. Real simple. All right. I appreciate it very, very much. Thank you so much. And folks, please watch this presentation. It's very, very useful, and I'll be here in the background. Thank you, Blake, for doing this.
Yes, sir. Thanks, Roger. Here we go.
The trades expressed today, they're all real-time trade signals. So there's no back test here, no fancy curve fit data. You guys can see all of these stats here with the win rate, average return. Let me just tell you guys, this is underlying stock alone. These stocks move so fast, so effectively, that Roger doesn't even feel the need to use options. Still able to target that $500 daily, even without extra leverage on top. So it's very easy to trade, very fun to trade. Now, of course, you guys know there's going to be winners, there's losers. That's part of the game. If you want to go to our homepage, you can get more information there.
Yeah, and here's the interesting thing, folks. Since we started this program, the average winner per trade is 3.3%. Now think about this. Imagine you making 3.3% on average every single day you're trading.
Imagine making 1% every day.
This is 3.3%. Now in this examples, we're going to show you that every trade is based on $5,000. In the spreadsheet, in the member spreadsheet, every trade is based on $500. Now, here's the cool thing: you can base because these things are $2 a share, $3 a share, $4 a share. You can literally start and cap your risk at $50, $100, even $25, just to start out till you get going. You don't need a big account. You don't need to do 5,000 per trade. You know, this is not NVIDIA options where each option is $5,000.
And you risk it going to zero.
Right.
Not doing that here.
No, this is a stock, and we know our stop loss ahead of time. So my main concern here is risk, not profits. Profits will come on their own. It's the risk. So I'm a stop loss Nazi here. Okay, I'm really tight. I am. I'm very, very. I don't like.
Around.
No. There's no messing around here. There's no messing around. So you can literally start trading this program if you wanted to. and a cap every trade at $500, $250, $150, whatever number you set it to, because the share sizes are so small, we can do that, which makes it really cool. Okay.
Yeah.
Now, go ahead.
Again, guys, there's going to be winners. There's going to be losers. No black box here. We do the best we can. You'll see the stories, tons and tons of stories every day.
Testimonials?
Oh yeah.
Oh, I love
They're
the
endless. But guys, if you're new and you're worried, just start paper trading. You always start paper trading, get an account from there.
Actually, a great time to do it now, because in the next I don't have my date, but in the next couple of weeks, they're going to be allowing. That's
Day
it.
trade.
No more
Yep, no more.
$25,000 requirement. You know?
Yeah. So guys, my name is Graham Lindman. I'm a senior trading expert here at Prosperity Pub. And today I do want to open your eyes to an all new way to target right around $500, right? $500, not a month, not in a week, but in the first 30 minutes of the trading day each and every morning. That's $500 in 30 minutes. Now, all we have to do is place a basic trade just minutes after the opening bell, setting up the profit target and stop loss in advance. Big benefit there. And when it all works out, we have a shot to hit our daily goal completely hands-free from there, usually right around $500 each and every day. For example, let's look at Monday, March 30th, just recently, guys. You could have taken 30 seconds to pop in your trade, first few minutes of the day, setting up in a manner that would automatically close out from there without any extra oversight. Sure enough, when things worked out here, you would have nailed the profit target just 11 minutes later, $789 on that example in 11 minutes.
Like that.
Can't complain. But let's look at the next morning, Tuesday, March 31st. Same thing. New entry at 9:44 a.m. Automatic exit filled 16 minutes later for $865.
And by the way, every one of these is actual trades taken. These are not hypotheticals whatsoever.
And this time it went for a little bit over that 500 goal. 865. You can't complain about that. And let's just keep going. Let's look at Wednesday, 9:32 entry time. Watch as the profit target was achieved a few minutes later for $636. Then on Thursday, $808 opportunity in only 13 minutes that morning. Now, guys, before we get too far along, I just want to assure you of something. What you're going to see today is not some sort of curve fit back test. It's not some sort of theoretical would have, could have, should have opportunity where hindsight's your best friend. You can be an armchair quarterback and look backwards. No, guys. Yeah. Instead, each and every example shared with you today are from real-time signals that my guests published and shared with a small group of beta testers. Now, it's nearly 500 traders, people just like you, and they've all been doing the same thing, targeting around $500 in the first 30 minutes of each trading day. That includes some top students like Donnie here, made it a quick trade there, $500 for today's trading. John S., $750 today, thanks. We have Mark here. We'll hear from Mark a few times. He's been nailing these over and over again. RXT in at 113, out at 133. He made $1,081 on that one opportunity. Dave J, $1,200 in the morning. Love that. Don G, thanks for the great trades today. $1,880 that day. And there's many more that you will see today. Now, it's all thanks to an overlooked force that's driving some of the quickest, fast-hitting moves each and every morning. It's one that can send a stock moving 10%, 20%, sometimes even 30% or more in a matter of minutes. Now, given the magnitude and the speed of these opportunities on the underlying shares alone, we can actually target our daily goal without touching any options, no complex spreads, nothing crazy like that. Now, you heard me right. No options here.
No options.
No options.
What is Clyde?
No leverage needed.
What is Clyde going to do?
Oh, my goodness.
Yes.
No short selling, no margin. This is as basic as it gets, yet still gives us the opportunity to shoot for that 500 daily goal without breaking a sweat. Here, let's look at some more. April 15th. Again, real-time trade. 6 minutes on NCI, $769. That's sweet. Next day, April 16th, paid out nearly double the daily goal with $906 in a little under an hour on ONFO.
And again, folks, these are actual trades, not some hypothetical mumbo-jumbo crap.
Now look at this one. April 17th, guys. A super fast winner. It's $570 in 2 minutes. That's 120 seconds. That's a nice little trading day right there.
And remember, your profit target and stop loss is put in at the moment you put in the trade, not afterward.
So you're not clicking a bunch of buttons.
No, it's OC. No, it's OC. It's just one cancel the other. Real simple. Yeah.
Now these are big, fast moves, and according to some of the top students, they're having more fun trading this way than anything else they've ever done or seen before, and that's a blast. Laura here says, that's it. That's how it's done. ASNS, less than 10 minutes. Carol here, AIFF, hit the profit target in 16 minutes. So much. Thank you for your expertise. Having so much fun.
So much fun.
So much
See,
fun.
There we go.
AB just got in. Thank you for Turb. 151% profit.
I'm telling you,
My
some of these really.
I saw that bird one too.
Yes.
Oh,
The bird flew like a bird. Yeah.
Richard, loving the Flyers. It's like playing a video game every morning. Talk about fun. Another nice profit in 8 minutes with RXT.
Very nice.
Ron, look at this one. Can't thank you enough for programs like this one from Friday to Friday.
Oh my!
When in 1 week, $24,000.
I didn't even know you really did a job finding these testimonials.
There's so many.
Yeah, there's a lot. Yeah.
Now that's why my guest is now doing something he never thought he would do before. He's opened up a brand new brokerage account, a side account, funding it with $50,000.
Do you know how this happened?
I don't know.
My wife forced me.
Oh, really? She must have seen it and said, "Why aren't you?"
She forced me.
Yeah.
It was my birthday gift. She's like, I'm opening up a new account. I'm like, why? I didn't ask for that. I have plenty of my own. No, I'm just for the small caps. Yeah. It was her. That's
awesome.
Wife.
She wants you to put some big cash behind it.
She does.
In the growth.
Yeah.
And it's solely dedicated to trading these 30-minute flyers, proving to you guys just how powerful they can be. Now, today, he'd like to invite you to join him on that ride. So welcome to the 30-minute Flyers class. Now, if this is your first time with us, my name is Graham Lindman. I'm the head options and swing trading expert here at Prosperity Pub. Now, over the last few years, I've produced some of our firm's most successful trading strategies. And by leveraging these methods, I've had some awesome results. Grew an account from 25,000 to 75,000 in 90 days, did that publicly in my Telegram. Then I did it again last year, grew it to over 200,000. We're at 262,000 as of today. So loving it, looking good on that. But these new 30-minute flyers, they actually grabbed my interest. It kind of pulled my attention. And that's because it has all the attributes of a strategy that I would like to trade myself and include in my portfolio. It has a high success rate, limited risk, low hold times, very quick execution, and the crazy thing is zero leverage needed to see these outsized returns.
Nope, no leverage.
Now, most importantly, that gives us the chance to target an extra $500 each morning. Now, the man behind these 30-minute returns is none other than Roger Scott, and he's one of the smartest and most diligent traders that I've ever worked with. In fact, he's actually the man who trained me when I was fresh out of college. So if you liked my gains, I'm taking you to the real teacher here of that. He took me under his wings and showed me the ropes. Now, not only does his work as a former hedge fund manager speak for itself, where you ran 2 multi-million-dollar hedge funds, but his trading partners also included the current economic advisor to Trump, top economist at Columbia, and the youngest turtle trader, and a ton more in your Rolodex. Plus, he's even managed money for one of the wealthiest families on the planet. So you've done and seen pretty much it all.
There's very little that would shock me here.
Yep. Now, you guys, he doesn't get there by accident. It didn't happen by chance. However, for the past 5 years, his focus has shifted. He's been spending his time developing trading tools and software for you guys, for us, for everyone he knows. And that we had a great group here.
There's Kane. There's Kane right.
I love it. Kane
right here.
Hey, there's my mom.
There's your mom right there.
Yep.
There's me teaching your mom right there. There's Murray. You got a whole mishpucha here.
Yeah. Now, if you've been following his work, you probably know Roger for a couple of things, right? You know, he's the founder of the Pro Trader Dashboard. It's a powerful trading tool that tracks stocks institutional investors are buying and selling in real time. I think he got 5,000 members. That's insane. Huge. Maybe you know him for the Trading Pit, right? 92 or 94.2% win rate on
94.75.
Oh, it just keeps going up.
Yeah.
Oh, it keeps going up.
Yeah.
But today he's unleashing the next evolution, taking things to an all new level. It's a new way to target $500 each and every morning within the first 30 minutes of the trading day. I love it. And then putting $50,000 of his own hard-earned money on the line to prove to you guys just how successful this can be. So Roger, I'm humbled to have you on as my guest today.
Thank you, sir.
Why don't you show us what you've been working on?
All right. Thank you for that wonderful introduction. We have about 686 people here. Thank you for being here. And I promise I will not disappoint. And again, none of what we're going to be showing you is hypothetical. It's actually trades that have occurred over the last 4 months since we launched this program.
About 500 people have been making money on them, and the rest of you have been missing out.
You guys have been missing out, and just like I told you guys you would, it's been actually working out just as well as I thought. Our profit factor's through the roof.
Mm-hmm.
So, Graham, thanks for having me today, and I really cannot wait to hear the stories on the folks tuning in once they hit the ground running with these 30-minute high flyers. It's a method that I've been using to help show folks how to grow their account each day at a rate unlike anything I've ever seen before. And I really mean that. And now I actually have numbers to back it up. And that's why I'm so excited about this opportunity at hand, because now we have about 100 trades.
Yep.
And now it's not like 5
There's
or
no denying it.
No. I'm talking about you tuning in right now. Now, Graham mentioned at the start of this class that I want you guys to know that even with the success we've had trading these morning signals each day, no strategy is going to work 100% of the time. Like any method, we're bound to have our fair share of winning trades and losing trades. So never go all in on any single trade. Remember, it's all based on probabilities. Get rid of that gambler's mentality, okay? With that being said, if you've ever burnt in the world of finance, well, you're not alone. Now, many top stories from people hoping to hit it big on stock investments. I mean, we've heard it all, literally on a daily basis.
Oh, yeah.
Just watch their account bleed out like a stuffed pig. And I've also heard from hundreds, if not thousands, of options traders who just can't seem to figure it out. It's fun to book double-digit winners with options. I mean, we do it every day. We just did it half an hour ago with MSTR. But it's no fun when you give up a week later and have a loss. So finding stocks in the stock market is not about closing one big trade every once in a while. It's about doing one thing consistently over and over and over again, right? Very, very important. And that's what these 30-minute high flyers are all about. It's a basic trade that anyone can implement any day of the week. There's no options. There's no leverage. I know a lot of you love options, and boy, nobody loves options as much as I do. But sometimes you just don't need them. What do you need an option for if the stock is $2? What do you need an option for? There's no margin needed, and making it aim to grow an account without taking on any crazy downside risk. All we got to do is set up a basic stock trade in the first 30 minutes of the day. I usually do them 5 to 10 minutes before the opening bell. We set up the profit target and stop loss in advance. We never, ever want to trade these without a stop loss. Ever. And when it all works out, we could see around $500 automatically hit our account that day. Now, today I'm going to show you our performance assuming a $5,000 stake. Keep in mind, since we're trading with very, very tight stops, we're usually at about 10%. Our goal is to protect our downside on every position. My goal in this program, my biggest goal is to protect you, not to make you. The profits come on their own with these trades. It's the protection. I need to protect you mostly from yourselves. Okay. For example, with a typical 10% stop loss on a $5,000 account, our max loss should be around $500, not the full $5,000. And as you'll see yourself, by sticking to the plan, these 30-minute flyers have been proven to work in the best of times. And more importantly, during some of the worst times. And remember, we started this 4 months ago. And that makes this program a lot more valuable than when we first started it, because we actually have a track record. We actually have proof that it works, not based on 10 or 20 trades, based on a 100 trade or somewhere in that ballpark. Now, for example, let's jump back to the end of January to show you what I mean. If you don't remember, it was a very ugly stretch that we haven't seen since the bear market. In fact, after steadily chugging higher for months on end, the market topped out on January 28th, exactly January 28th, and then rolled over from there. After that, trading turned into a nightmare for most people. Anyone having long call options at the time likely saw their investment go to zero, coughing up all their hard-earned money. But with these 30-minute high flyers, it was a very, very different story. Let me show you what I mean, showing you every trade signal we took while the market turned for the worse. This is winners and losers included. Something most people won't show you, okay? Signal number one, these are actual trades, okay? Signal number one, $1,188. Signal two, $404. Signal three, down $575. Signal four, positive $435. Signal five, positive $522. Signal 6, positive $448. Signal 7, positive $439. Signal 8, negative $338 or $330. Signal 9, $722. Signal 10, negative $687. And signal 11, $1,085. Now, this is real. It's not make-believe. It's not done to show you something. This is what it is, okay? Tally it all up. That's 8 out of 11 winners. And you would have made over $3,649, all right, while the market was heading down.
Bad time for stock traders. It's a good time for you.
Yeah, people were like, "Oh, my portfolio," and I'm getting emails. Yeah, high flyers, high flyers, high flyers.
I love it.
Remember, there's 500 people already in this program.
Yeah. Now, Roger, that's obviously really impressive to do it then. While most people invested in the stock market would have seen their portfolio drop like a rock, right? And anyone long basic call options at the time, you'd give a full $5,000 loss. No fun there.
No.
But anyone trading your 30-minute flyers, they would have seen a totally different outcome. In fact, many people did see that outcome. Walking away with a total of $3,649 in profit. That's net profit during that market plunder.
Yeah,
right there.
And you didn't, and remember something, you started with $5,000 and you made $3,649.
Percent return, market's dropping.
In how many days?
In 11 days. Nice.
That's what I'm talking about.
And stock alone, no options. We're not talking about throwing a Hail Mary.
And folks, it actually happened. It's not a hypothetical. This actually happened. And there's 500 people. I don't know how many are in here right now, but there's 500 people and they're loving this program. All right.
Yeah. Now, to give you guys an idea, that $3,600, that's more than the average Joe brings home after 2 full weeks of work at the desk job.
Really?
Yeah, it's more income right there.
Wow.
But with your method, folks would have accomplished that same outcome after 11 trades. So 11 days in.
And we trade, as you know, we trade every day, sometimes even 2 trades.
Right.
We had a trade this morning, as a matter of fact.
And $586 winner.
It was a winner. Yep. So go ahead, please.
So that $3,649 after about 2 weeks, that includes both the winners and the losers too. No cherry picking. That's every trade.
Yeah, no monkey business.
Yep.
I don't like monkey. Well, I do like a little monkey business, but Graham, you're exactly right. However, you're forgetting the best part. This was all done by only trading the first 30 minutes of the day. Meaning my students were following along, weren't strapped to the computer all day to hit those results either. Just a quick trade in the morning while enjoying the hot cup of coffee or tea, whichever you prefer, then we're done. And folks, I honestly don't have the time because I have so many other programs that I need to deal with. It works out perfectly because my large caps don't get going till a little later in the day. So in the morning, it's perfect for me, you know? This does not require you to be at your desk. As a matter of fact, you put that order in, you put a contingency order, you could do whatever the heck you want to do. Keep in mind, this is all from trading the underlying. There's no leverage, there's no options. It's level 1. You could do this in the cash account if you want. As a matter of fact, why not? Yeah. Which also helped keep the equity curve very smooth because we're only taking one trade and we never hold a position overnight. So you don't have a drawdown. Your drawdown is from holding positions that are going against you. We're not doing that. Even during some of the most unpredictable times. For example, let's go to the next week.
Keep it rolling.
Yeah, let's just continue. We don't want to pick isolated periods. The market was jumping all over the place. We landed 5 out of 8 signals.
Not bad.
I like that.
Yeah.
Worth a net profit of $1,037 in 1 week. Then the following week, while the stock barreled lower, the market barreled lower, we went 7 for 0. Yes, and again, these are actual trades. Worth another $2,757, right? My point is when market volatility is spiking, the volatility in our portfolio is not, okay? Remember what I told you, diversification is the only free lunch Wall Street is going to give you? I keep saying that over and over and over and over again, over and over and over again. Do you understand? This doesn't have correlation to the broad market. It's not correlated to the broad market, which is very, very important. Instead, it was 2 more steady weeks where the profits were able to tick higher, tallying up a total of $3,795 when it was all said and done. Now, these 30-minute high flyers are all thanks to an overlooked market force, ones that's driving what I believe to be some of the quickest, fast-hitting moves each and every morning. But before I dive into how it works, first I need you to take a step back because it all starts with the subset of the stocks we're trading each morning. While most folks love Apple, NVIDIA, and Microsoft, and I love them as much as the next guy, don't get me wrong. The large cap tickers we all know and love, there's one big problem with trading stocks like those, and that's called market manipulation, the old Pelosi technique by the massive Wall Street firms. Across any of the major firms, there's trillions of dollars at play. One big order in the opposite direction for Wall Street, and your trade that looks perfect, well, it's tanked. And frankly, there's nothing you could do about it. But with these 30-minute high flyers, we're actually focusing on the stock that Wall Street can't target. They're too small for hedge funds. They're outside of the institutional purview. Stocks with much smaller market cap, companies you've never heard of. See, an institution can't. They'll move them too much. It's like a ping ball. It's too sensitive. You move it and it just goes up and down. It's too much. Now, most people ignore these companies completely. They're actually the main reason we've had so much success. Thanks to regulations put in place by financial institutions themselves, these companies are so small that the big players on Wall Street typically avoid them altogether. They are under the radar. This, of course, is what allows us to move freely and naturally without a massive players manipulating the move, which gives us a much cleaner outlook for our trade. And in my opinion, a much better shot to see our daily $500 goal actually come to fruition. Because once we get our signal, all we got to do is set up a basic stock trade in the first 30 minutes of the day, let the stock move a few ticks in our direction, and boom, as long as it happens, we could see around $500 automatically hit our account that day. For example, look at SEGG. And folks, every one of these trades are actually trades we've taken between January and today. SEGG. Now, if I had to guess, for the most of you, this is a ticker you've never heard before. It's a tiny company with a measly 8.5 million market, 8.5 market.
Tiny.
And my house in Beverly Hills was worth more than this house. And definitely a stock that Wall Street wouldn't touch, which is good news for us. Now, at the time, the company was under major headwinds as the struggling company fired their CEO. Now, and the stock itself was taking a punch on the chin, falling north of 50% going into January. Oy vey. However, on the morning of January 14th, none of that really mattered to me at all. That's because right at 9:46, our signal fired off. Can you go in the middle of the room and just click the light? It's auto turn on. At 9:46, our signal, it's done. It's done. That's it. Signal SEG, meaning the market force that we're talking of taking advantage of could send the stock racing higher all morning. So anyone following along could have taken 10 seconds to place a basic stock trade on SEGG, just like we did. You should all be long SEGG now. Yeah. Exactly. And then automatically hit the profit target just a few hours later. It took a little time in this case. With a shot to pocket an extra $580 from the 30-minute flyer that morning. Real trade, no monkey business. Deborah, flyer winner, 500 on SEGG right there. And it was the same case with our trade on CJMB the very next day. This is a very small company. The total market cap is just under 7 million. I trip out when I hear these market caps, right? And thanks to the regulations, it's one that Wall Street typically wouldn't pile in on. Meaning our trade can move freely and naturally without a massive player manipulating the move. Now, for most people, trading on January 15th was like watching paint dry. During the first half of the day, the S&P chopped around like just
no action.
None. Now, followed by a nasty sell-off going into the close. Frankly, there was nothing to be excited about on January 15th. Now, of course, unless you were trading one of these 30-minute high flyers, that's because our signal fired off at 9:39 a.m. that morning. Anyone following along could have placed a quick trade that morning and let it take care of itself from there. Sure enough, when it all worked out, folks could have landed $935 payout before noon. That's 18.7% return on the stock alone, while the S&P 500 was flat like a pancake, completely and utterly.
And you
flat.
think 18% of the stock on a day? That's
on a stock.
That's twice the S&P's annual return.
On a stock. Remember, we're only trading stocks that are having the biggest move they've had in at least 2 years.
Yeah, some of your students, Peter, he did even better. You did 18%, he got 28%.
28%.
Beating you.
They're cheating. They're doing better. And then we did it again the next day with our 30-minute high flyer JFBR, jumping in on the trade at 9:51 in the first 30 minutes of the day and automatically hitting our profit target 5 minutes later. Enough to pocket $700 even while the SPY, NASDAQ, and Dow all dropped lower that morning. Now, to be clear, while the Wall Street typically avoids these stocks because they're so small, we are not trading over-the-counter stocks. I repeat again, we are not trading over-the-counter stocks. We're trading listed stocks. These are stocks that are listed on the New York Stock Exchange, NASDAQ, American. These are listed stocks. These are
real legitimate companies.
These are actual companies.
No Wolf of Wall Street.
No. And actually, most are like $2, $3, $1.50. I'm not
Right.
like trading like 5-cent stocks.
Mm-hmm.
In fact, each and every one of these tickers can be traded from any regular brokerage account or any retirement account. The only difference between trading Meta, Google, or Tesla and one of these tickers is we can actually gain a major advantage with the underlying. We don't have to use implied volatility to our advantage, where we could trade the price action without fear of market manipulation.
Well, Roger, that was 3 rock solid winners in a row. They have them back to back, each one hitting that 500 daily goal or better. But let's not forget to mention that those weren't the only winners you hit that week. You actually dug it up. You had a few more that we didn't get the chance to show folks today. Let's roll through some of these. 496 on JagX.
Not bad, huh?
Not bad. Look at this one. $851 on ROLR. And then this one, I'm surprised you didn't show this one. It's a big one. $1,594 in just a few minutes on SPHL.
Isn't it amazing?
$1,500.
We've been very busy between January and these are all trades.
Yeah.
These are all actual trades that we've taken. Trades that a lot of you guys missed out on.
Yeah.
Yeah.
Well, some people didn't miss out because you're students. We've been seeing all all sorts of stories. Let's go ahead.
Yeah.
Your students followed along with both the winners and losers that week. Let's tally it all up. 3,187 in profit over that 1 week.
They could have made 80% on their account in 1 week.
1 week.
That's what
Underlying alone.
And folks, you don't need leverage with these small caps. They give you plenty of leverage, okay?
Yeah. Now that explains why we saw dozens of stories hit your inbox that week from the top members too. Hollywood said, I love the Flyers making money with Rogers' help. Here we have BP said, thank you for the SPHL. Took $650 to start the day and then did another one, $340. Let's do it again tomorrow. It's a Freaky Friday. Kevin G.
There's Kevin.
His account grew 10%.
The whole account grew 10%.
Now, Sandy says big winners today in minutes, SPHL, CJMB, also small one. That's a 3 for the day. Great start to the year for Sandy.
Yeah, look at that. Great start of the year. Yeah.
And Mark, here's Mark again. Made $4,800 that week from Mark.
But look at that. He started with 10K. That's almost 50% return.
Yeah, that's amazing.
Folks, these are real people. A lot of them are here.
Yep.
You know?
So, Roger, why don't you tell us what is this market force driving these 30-minute flyers and what exactly are you looking for to enter?
I'll tell you.
Is it a technical chart breakout, some momentum play? What's going on?
Well, Graham, we're actually not looking for any sort of technical chart pattern or momentum either. Shockingly enough, with these 30-minute flyers, I'm actually targeting companies that most people would not touch with a 10-foot pole. I'm talking about companies that are running low on cash, have major headwinds, and ultimately in a downtrend spiral as far as the long-term price action goes. And while that may sound completely counterintuitive, there's a very, very specific reason I'm doing this. It all boils down to the very essence of how the markets work. Let me walk you through what I mean. When a stock trades higher and higher, for months on end, that doesn't happen by accident. That happens because more and more and more investors keep buying the stock. Alternatively, when a stock has been trending down for months on end, it's not a random occurrence. It's because there's investors shorting the stock, shorting the heck out of this stock. And this in turn can turn into a domino effect that sends the stock higher and higher. When investors going short on a stock, they initiate the position first by selling the shares up front. That's the way short investing works. However, if the stock starts to rally, maybe on earnings reports, new business deals, increased sales numbers, there's a risk of watching the trade go completely against you, which is going to cost you money. And the only way they can exit the trade and cut their lose is by buying those shares back. It's called a squeeze, is what it is. That buying can instantly start pushing the share prices higher. And of course, this only escalates the move because if the stock continues to rally, the other short investors start to lose moolah. And that brings even more buyers to the table as shorts rush to close out their positions because the only way they can close the trade and stop the bleeding is buying the shares of the company. That's very, 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 very important. And that can send the stock racing higher all morning and very fast.
Yeah,
back.
like it there.
Yeah, because these shorts they start to panic.
They have to.
They're losing money. Yeah, they're stuck. And that's exactly what we're capitalizing on these 30-minute high flyers, bag holders, I tell you. Because when one of these heavily shorted stocks begin to move higher, these short sellers will start to lose moolah. And if they want to stop the bleeding, they must buy shares to close out their position. And that ultimately can send the share price racing higher and higher all morning long. For example, like our trade on April 17th with Energy Focus, EFOI. At the time, the stock was getting gutted, down 40% since the start of the year. With short sellers piling in, betting on it to go lower, 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 lower. However, on Monday morning, April 17th, news broke that EFOI was closing a massive data center deal. Now, this is like the biggest news the stock has ever had. Yeah. Sending the stock screaming higher in the pre-market session. And that was very bad news for anyone who was betting against this stock. Remember, the higher the stock goes, the more money short sellers lose. When losers become too painful, they close out their position. And the only way to do that is by buying shares, which sends the stock even higher. So I alerted members right away at the opening bell. And sure enough, as the short sellers rushed to exit the position, buying shares of the stock, giving way, way, way more and more and more, buying to close their position as fast as possible. They didn't want to stay in that spiral. We were able to hit our profit target in a matter of minutes. Now, of course, many of the top members did even better. Very nice on EFOI. That was a quick $590 profit and a great way to start the day. Notice, always great way to start the day. Great way to start the day.
Definitely is.
That's because that's how we start our day. Like this morning, that's how we started our day. EOFI was fast and fun. See, again, fun. I'm telling you, that word fun always comes up. I did well with 53. I'm not used to hearing fun with stock. I never do, even winning programs. But I always hear how fun this program is. EOFI was another my greatest hits profit, $2,100
In the morning. Love it.
Yeah, and it was the same story with the trade we booked the day before that, ONFO. Like with any example, you'll see today, at the time, the stock was taking a beating. It was getting beaten. Short sellers were piling on, betting this company to bite the dust. Now, frankly, honestly, I don't really care what sentiment is around the stock. I don't care what CNBC. I haven't listened to CNBC probably in 15, 20 years. Fox News, investing.com has to say. I actually do check Fox News sometimes, but not CNBC. All that matters is that when the short sellers find themselves in a pinch, which can typically happen around the good news or catalyst, it can set fire to an unstoppable force, sending the price higher as they must buy the underlying shares at a rapid pace. And that's exactly what happened on April 16 with ONFO. That morning, before the market opened, news broke. ONFO was getting $100 million to expand its resources. I mean, that's like the best news the stock has ever gotten in history, sending the stock skyward in a matter of minutes. Now, for investors betting against the stock, that was the worst case scenario. And as the market opened, they had no choice but to buy to cover their losers and stop the bleeding. As always, I alerted my members in the morning, handing over details. Look at that, 9:24.
Yeah, before the market open.
6 minutes before the opening bell.
They already knew.
6 minutes, they knew everything. And as the 6 minutes, as short sellers were left with no options to buy. There's no chasing here, folks. We don't chase. We're left with no options to buy shares of the underlying stock. A lot of these stocks don't even have options, you know? And as the short sellers were left with no options to buy shares, look at that. Continue buying. They were squeezed. We made $906. Pretty great, right? You're the best. I'm grateful. Yuri takes tons of my
$2,028 for Yuri.
Yuri was at the live class we had. He's been taking a lot of trades. He's been taking these trades. He takes a lot of trades. Yuri, if you're here, tell them how you've been doing on the high flyers. I'm always getting emails from Yuri. Thank you, sir. Today might have been the wildest ride on the total of $2,297 again for Mark. Now, the technical term for this is a short squeeze. That's what Uncle Roger is looking for, short squeezes. And Clyde helps me every day. That's when all the short sellers get pinned to the wall with no other choice but to buy shares of the underlying stock at a massive clip. Now, here's the beautiful part. Unlike major tickers out there where Wall Street has so much money that they can simply add to their short positions, crushing any hopes of the stock going higher, since we're trading stocks that they typically do not touch, this allows the stock to move higher freely on its own without manipulation from the big players. When we sell the stock, that's when they start looking at them. You know, they're like, oh, the stock is going up, which is one of the main reasons our results have been so good even on some of the worst market conditions. For example, like with our trade on GXAI back on February 3rd. Now, for most traders, the morning of February 3rd was just ugly. It was just ugly, as the S&P shed nearly 1.5% in a matter of hours. In a matter of hours. But for anyone trading these 30-minute high flyers, it didn't matter at all. And that's because with these quick squeezes, we don't need a broad market going higher for us to have a good shot at hitting our goal. In fact, some of our best results came on days where popular stocks were falling like a rock. Seriously. And that was exactly the case with GXAI. The morning before the opening bell, GXAI announced a strategic partnership with Amazon. I like that. That left short sellers scrambling to exit around the position around 9:30 a.m. because they were panicking. So I sent out a trade to my members, 9:51, place a buy stop at GXAI at 220, profit target, stop loss. Yeah, it's all there. It's all there, folks. You never, ever, ever, ever place a trade without having a stop loss in this program. It's just not, we don't do that. We just don't. With these specific entry prices, profit target, and stop loss all in advance, there was no surprise. The buy order came flooding in as short sellers were rushing to get out of their position. And when it all worked out, folks could have grabbed an extra $500 payday that morning.
Here we had Catherine made $1,020 on a couple shares there of GXAI. First time trading the flyers yesterday. First time for her. Could be first time for these people tuning in now.
And as I mentioned, folks, these are not hypotheticals. These are actual trades we've given you since January 1st that folks have taken and loved. And I'd love for somebody here to you know, I don't have the chat open right now, but I'm hoping that some folks are giving actual feedback about this and telling the truth about this. But yeah, usually we play like this morning, for example. Look, let me show you what we did. Look. Let me show you. 9:28. Then another one, 10:15. But this is not a pre-market open. But again, we do them very early in the open. Yeah.
And then we had Jeff. Look at Jeff.
Jeff says started trading real money in September. Was out for a month of December with a small account of $2,500, now over $16,000.
That's a big growth.
Yeah, yeah. Very, very nice. And remember, market makers don't get involved with these stocks too much. This is retail. These are retail stocks. Market makers get involved with options, not with these stocks. Now, of course, the reason the track record has been so strong is simply because we don't blindly take every stock that goes into my scanner. In order for us to take the trade, a few things have to happen. First off, as you know, we want to see a catalyst. The best catalyst the stock has seen in at least 2 years. Usually, it's the biggest catalyst the stock has seen in lifetime.
Ever. Yep.
Yeah. So just FYI, that's what can easily put the short sellers in a bind where they must buy shares of the stock. But secondarily, we want to move to be confirmed by volume. And when I mean volume, I don't mean just a little more volume.
I mean, look at that.
I mean crazy, batshit crazy volume. I preferably want to see volume at the highest level it's ever been before the market even opens. You understand? Basically, I want to see a stock trade at its highest volume ever before the market even opens.
That's a lot of
pre-market.
Yeah.
So to give you an example, let's say the average volume is 100,000 shares. I want the volume to be 10 million before the market opens. Do you understand what kind of stocks we're looking at? And by the way, we don't just give it a day. We give those stocks a full week. We stock a stock for a full week, 5 days. So we're looking for a massive catalyst, okay? And also the price action. In order to qualify as a trade that day, we want to see the price break above the pre-market pop when the news was announced. Okay. Raleigh, repost that from Kevin, please, when you get a chance. I want to see the price break above, okay? And the trading high volume at a 2-year high. This ensures that buyers are there and the price can fly higher and higher. And again, usually the 2-year high is just a rough measure. Usually I want lifetime high, like highest high ever. I want to trade the stock when it has the biggest news it's ever had in its life. Does that make sense to you guys? I do all the heavy lifting on the surge, the scanner, the mapping. I give you the levels, everything. There's nothing to guess here. No strike price, nothing. I give you the stock, I give you the entry, I give you the exit, and I give you the stop loss. For a member, and you can size the shares based on that easily. I'll show you very easy how to do that. It's very straightforward. For example, AZI on morning of March 9th. At the time, the stock was trending lower and lower as sellers were piling in, looking to push it on to the ground. But out of nowhere, on March 9th, positive news broke that AZI was fulfilling a $7 million commitment. $7 million commitment. That's how much Amazon spends in toilet paper in a year.
It's probably a $7 million stock in total.
Yeah. That was our catalyst. Once we where I'd like to see a short sellers forced panic, going, oh my God, what are we got to get out of this stock. We got to get out of this stock, like ASAP. Of course, in order for us to enter the trade, we need to see the price action and volume confirm the move. And that's exactly what happened. All right. In fact, there are so many trading volumes that day that you can barely even see the other bars over the last 2 years. Yeah,
2 years of volume right there.
Do you guys see the kind of volume I'm looking for? That's the kind of volume I'm looking for. And by the way, we have our own separate Telegram channel here. That means buy orders from we're hitting this stock like there was no tomorrow. So we set up our trade to automatically enter once the price action confirmed the move. If it didn't get there, no problem. The order cancels itself or we're on the next trade. But in this case, like today, we had 4 trades, only 1 triggered. That's it. We canceled all the others. In the case of AZI, the trade filled that morning. Only 4 minutes later, we nailed our profit target automatically. Anyone following along could have seen an extra $684 in their account, even if you weren't at the computer.
Yeah, we had Kathy here. She hit that one. Thanks for making a down day up. That's a good way to.
I like that. Thanks for making a down day up. Yeah, Roger, nice start with AZI, about $500. Oh, he sends me Ivano from Italy. He sends me stuff all the time. Mark, again, love it. Jumped on AZI, $1,768. It was the same story with RTX, February 20th. Overnight, news broke. RTX was partnering with Palantir. Woo!
It's a big deal.
That's a big deal. That's our catalyst. Look at this, $1 stock. The stock costs $1 shares partnering with Palantir. Think about that for a minute. There's your catalyst. And by looking at look at trading volume compared to every day.
You can't see the other ones.
Look, guys, this is every day. This is what I was looking for. Do you understand what I'm looking for? I'm looking for someone to hit this with a hammer. The largest transaction volume in the history of the stock. Okay? So we had our buy order at 6 minutes before the opening bell, as you could see right here. Look, buy stop, profit target, and I wrote, I'll post stop loss shortly. And I usually do it within like 30 seconds. Yep. Our initial stop loss is the difference between our profit target and our entry.
Gotcha.
So we always have a stop loss. It's always you would take $1.30, subtract 115, and subtract 115 from the entry. So your stop loss would be $1 in this case. Your first stop loss would be $1. Which was our final confirmation that RTX would have had a great shot to run all morning long. Sure enough, we were filled right at the opening gate, and within 20 minutes, $608. And guess what Peter wrote me? I made $886 on RTX in 20 minutes. Love this program and the action. Folks, think about something. This program has been around for 4 months. Have you ever seen so many testimonials? Thanks for the RXT trade. Just made $576. Trone got in RTX at 164 out. I keep thinking this is RTX.
Oh yeah.
Yeah. In at 164, out at 190, $963 profit. And folks, I could show you a lot of examples. We've had 92 trades. Fuse on February 2nd, pre-market catalyst, Fuse machine stock source on a strategic AI partnership with IBM. Oh my goodness. Linda, we posted that in the beginning and we'll post it again. I'm going to close the chat. Yep. I don't need to have the chat open. Pre-market catalyst. Short sellers would have bought the shares. Trading volume at a 2-year high. 2-year high.
Again, you can't even see the other candles.
Look at these candles, guys. Look at these candles and look at volume. Do you understand what I'm looking for? The
Big
day.
Money, yeah.
I'm looking for the day that the stock has its biggest day in its life. And price action breaking above the pre-market high, confirming that this high flyer is going to go higher. Automatically filing in our order. There it is.
Yep.
And your stop loss is the difference between the profit target and your stop loss subtracted from your stop. And then I actually give you an updated one. Okay. 431 in 15 minutes. 985 on Catherine. Folks, people took these trades. Real people took these trades. A lot of them are in this room right now. All right. Great selection on Fuse. I made $1,209 in about 15 minutes. Or how about feed on January 29th?
You got so many examples.
I have a lot of examples because we took a lot of trades because we trade every day, including today. NView medical stock surge after nationwide syringe distribution deal. Okay. Nice. Volume at a 2-year high. You can't even see the volume here, folks. Look, you can't even see it. That's what I'm looking for. Price breaks out. Preset order gets filled. Target achieved $1,188 on a $5,000 account.
That's by 10:15 in the morning.
Yeah,
by 10:15.
When I say folks had a good morning, they had a good morning. Mark, great play on feed. I made $1,187. But Dresh, sorry if I'm mispronouncing your name. Love the action on feed this morning. Wasn't 1,000 shares, $1,000 profit because he sized it the right way. Yep. This is my first trade. Oh, I love DJ Dave. He's in a lot of my programs. Up $398. And with results like that from live signals in real time, I'm sure you understand why my wife forced me to open up another $50,000 account. And I'm not kidding. She actually she put a gun to my head because I believe cold-heartedly that these opportunities will continue to stack up meaningful results at a faster pace than anything else out there.
Well, Roger, you guys are obviously killing it with these 30-minute flyers. And guys, we're going to get here. So you guys can join here in just a second. But I really love how straightforward they are. I mean, let's just look at some of the benefits here. Only 30 minutes each day. You know, you're in the morning, you got all the rules set up, you're done. Yeah. Pretty easy. Buying shares, you're long only. Don't have to worry about shorting, no options, nothing.
Not one short ever.
Anyone can do that.
Buying share.
Automated profit target. People love that. And works in bull and bear markets. We saw that one. Markets dropped 1.5%.
When markets went down because of the war, I was cleaning up. Right. I was cleaning up. Yeah. And how about automatic stop loss too?
People love this stuff. Yeah. Risk protected. And then you still get that chance to aim for $500 daily,
which is nice.
Very, very easy. And maybe most importantly here, with that market force, that short squeeze that you're tapping into, it seems like they just went over and over and over. And it makes a lot of sense.
Because I know how to do this the right way. Yes. Graham, having seen haven't seen the amount of success we've had so far, this daily trade in good markets, bad ones and good ones, I have to agree. With that said, as you all know, when it comes to trading, you have to be able to stomach the losers too. If you can't get them, then you should not be trading with money you can't afford to risk. And no matter how good everything looks, you should never bet the farm. That's a recipe for disaster. Will tie up your emotions in a way that you don't want to. Instead, like Jeff S. mentioned, I want everyone to focus on the long-term trajectory and how things could shape up over time by sticking with the daily plan. And that actually brings me to my next point. Most trading strategies or income methods I know of have one real flaw. They do a great job picking up winners at a high clip, but when you do eventually take a loser, they wipe all your gains. It's called walking up the stairs and falling down. And there's nothing more frustrating than that. What else has been there, right? We've all been there. We've all been there, right? We've all been there, but there's where I believe we can really take it up a notch here with the 30-minute flyers. Luckily, the way I trade these 30-minute flyers, you should never take a big loss. As a matter of fact, on every trade we take, I have a very strict stop loss set, not at 10% exactly. But right around somewhere right around that ballpark. And it's based on volume and 1 minute volume and price. It's not based on 10%, it just happens to always be around that level, which means I were to put, let's say, $500 to work on one of these trades, I'm really risking only $500 of that stake on average. And we always have a stop loss. There's no such thing as trading. You can't trade these without a stop loss. If anybody tells you to trade small caps without a stop loss, they're not giving you good information. So on the occasion where I'm wrong, which does happen, I'm not wiping out my account. Instead, as you've seen from this tracker, it's just been one small setback, okay? Before we took the next spiral up. See that? There's always going to be a loss, but then you make money. It's just how it works. Stick with it. You can't get stuck. It's like playing ping pong and saying, oh, I lost the hand, I'm done. You got to keep going. You got to keep going. You know? The important part is simply sticking with the strategy, knowing that our odds have stacked up big time.
Well, Roger, just seeing the trade tracker for myself, I know you're definitely right about that. I mean, so far, anyone who took all the trades, winners and losers, in those first 4 months since you launched the group.
Look at this.
Yeah, 182, and that's on the stock. Ooh.
Folks, now this is called the bottom line. This is where the buck stops. This is the bottom line. For every dollar we've risked, We've lost, excuse me, not risked. We've lost. We've made $1.82 back.
Nice little return.
Now, how aggressive would you get if you would be making $1.82 for every dollar?
Imagine you had a vending machine, you put $1 in and it's sending you
$1.80
back.
You'd be going insane.
Right.
Folks, guess what? This is not what I'm hoping to do. This is what we've done with the last 92 trades. There's no could have, would have, should have. This is what it is. I'm asking anybody to do the forensic accounting.
Well, yeah, year to date.
Wow. Now, folks, average trade risk is $500, right? We're up 13,800. What is that? What percentage of that is of our risk per trade? Because we're only in one trade at a time.
Yeah, so that's if you start with $5,000.
Yeah.
And remember, we're keeping those stop losses.
Yeah.
Each and every trade just.
So you would have made almost 300% on your account, but what about just on your risk?
If we say the average risk is about 500, yeah,
that's 15 times your money.
Yeah.
In the last 4 months.
And keep in mind the markets, other than the last couple of weeks, it was not a pretty start to the year.
And folks, real numbers, not some mumbo jumbo hypothetical crap. Real numbers. Okay.
Yeah. So you average that out, it's like $3,400 in extra income each and every month. That's
risking $5,000, not risking 5,000, but having
5,000, risking about 500.
They're making about 80% on their account a month.
It's amazing.
With a $5,000 and not using any leverage whatsoever.
30 minutes of the day.
And people tell you that it's that nobody can trade small cap.
Right.
Yeah, right. My ass, nobody could trade small caps. 1 year pace is $41,649. No leverage, no level 2, no level 3, no monkey business.
That's right.
Right.
Yeah. Over the course of the year, yeah, $41,000 pace. Woo.
That's very nice.
There. And guys, keep in mind, again, without options, without leverage, no compounding or no compounding any pennies. It's just flat.
And no correlation to the large market.
Yep.
No correlation to the right market.
Yep.
Only from trading shares.
Yep. First 30 minutes of the day. Very easy. So with Roger, with that said, let's go ahead and fly through this. Do you mind sharing details on how we can get in on the next opportunity? We missed out this morning. I missed out this morning. Some people made 500, 600, 700 bucks.
Folks,
how do we get in the next one?
Everyone tuning in right now can access the next signal and each and every trade alert going forward. Usually there's one a day. Sometimes, that we won't have one hit, but there's always something going on almost every day. High flyers. Think about this. Since January 1st, we've had 90 something trades. That's a lot of action, right? High Flyers Trading Club. The High Flyer Trading Club is the only place in the world that you can trade these quick hitting opportunities. As a member, you only need to dedicate the first 30 minutes of the day, and then we're done. Automated profit target, automatic stop loss. One of the guys here, Yuri, he has an office job. He trades these all the time. If you can handle that, you know how to place a basic buy order on a stock, not even an option, you're ready to roll. Then you become a member. You'll also send a private link to join our members-only Telegram channel. This is our home base for all the opportunities. And every morning you can expect to hear from me in my private channel. Every single day I run my scanner. I analyze about 15,000 tickers, and then I'll post the stocks on the scanner just like this. Look, ticker symbol, profit target, stop loss.
It's at 924 before they open.
Always before they open.
Yeah.
Unless the stock doesn't hit, then I have, plenty of time.
Watch list.
Yeah, exactly. I send out all of the information before the opening bell. That way, you already know the game plan the day ahead. And of course, when it's time to because I need to have that opening period, I need to be able to see that it's setting up. I'll be 100% on top of what I do, just like I do every day for you, which is exactly what happened here on April 13th with RECT. Our buy order filled at 9:52, 30 minutes after I notified them of it. So there's no chasing, no surprises. You can't chase these stocks. And then the profit target hit 7 minutes later on an order that was already in the books.
$500 in 7 minutes. That's a pretty nice hourly rate there.
The exit order was already in the books.
Right.
So there was nothing for you guys to do.
You don't have to click nothing.
Oh, hey, look at this. Rect made $550. Here's another one. There's Yuri.
Yeah.
He made 12.46%. Rectify. There's Mark, $810. And it was the same story. Bird, oh my goodness. Oh boy.
Buckle up, everyone. Hold on to your seat.
The bird flew away, okay? With the exact information needed to place the trade. Buy stop on Bird, 794, profit target 870, stop loss 724, filled at 936, right? Profit 5 minutes later, $899. Now, how about this? 830 out of 10, Sandra, $1,039. Ron, thanks for the intel on Bird. Total gain $12,329. The best day ever. You're the best, Ron. He made $12,000 on that trade.
One trade, and then he wasn't the only one.
Robin, Bird yesterday for over $12,000 in profit. And since we're not trading any options, getting in and out of these stocks is instant. There's instant. Remember, you're trading a stock that has the highest volume it ever had in any day. You think liquidity will be good on that stock? Yeah, I think so. So now, one of the most beautiful things about trading shares is that we can use protective profit targets. That means when a high flyer takes off, we can let it run without staring at screens all day or stressing out about giving those gains back. And in the instance that it doesn't move in our favor, we have a stop loss. You have a bracket order. That's actually why I opened the account at Thinkorswim, because they have a conditional. A lot of brokers don't have conditional orders. And that's a big benefit, especially if you work during the day or simply don't want to be glued to the screen. High Flyers Trading Club, the automatic exit plan. When you enter a trade, I'll teach you how to simultaneously set your profit target order to help you close out automatically. That way you can get the true automated experience with these high flyers. Of course, the whole process is covered in a full detail in our masterclass, which you'll be able to access right away. I'll walk you through the scanner step by step, plus I'll show you 2 more strategies we'll be using for even more trades. I'm working right now on a similar program that shorts. Okay. Very high probability shorting, which is how most people trade these stocks. So I'm working on that right now, but I want to have a little more data, and then I'll add it to this program. Cool. Yeah. I just don't want to give you anything till I'm 100% sure.
Makes sense. Yeah, well, obviously this is a premium level program.
Oh, yeah.
It's worth a lot of money here.
Yes.
I'm loving it.
It's fantastic.
Now, as a member, guys, you're going to get hands-on expertise from a former multi-million-dollar hedge fund manager. Now, that alone, he's doing all the heavy lifting for you, walking you through the trade step by step, guiding you along the way. That alone's worth like $10,000, and probably more.
I'm going to tell you, I know somebody who trades a program that's half as successful as this, and they charge about $7,900. Yep. I'm giving people a steal.
Yeah. Now, plus with hundreds of morning trade opportunities over the coming year, I mean, there's a lot of opportunity. The value of this program feels virtually endless.
Yeah.
So, Roger, what's the cost going to be?
Well, Graham, this shouldn't come as a surprise, but the retail price is $49.95, and that's the price folks will see when they sign up on the main website. However, I don't want the price tag to hold anyone back from these daily opportunities. So here's what I'm going to do. I'm going to set up a very limited offering for the people in this room who are 100% in with me on this. So if you join from the link in my team is about to post in the chat, you won't have to pay the full retail price, not even half of that. Instead, today, I'm setting the starting price at only $29.98 for the year. And then for the folks who joined today, Graham, I'm slashing an additional $1,000 off of that already discounted price. I'm being really generous today. That I want folks to see that you could trade small caps
at the right on this.
Exactly. This brings the annual membership down to $19.98, which I think is very reasonable. And in my opinion, it's an insane value. Realistically, with $500 daily goal in mind, that means if everything works out, you can cover your costs in just a few trades. But to make it even easier, I'm going to do something special. I'm going to split those payments in half.
Really?
Yes. Folks, you'll be charged $9.99 today, and the second payment billed in 30 days. My hope is that we can cover the total cost of the subscription before the second payment is due. Yeah, because this thing makes money.
Right.
I mean, the last 3 days, they could have made enough money to pay for this thing. That said, today's discount and the split payment is for charter members only. In other words, it's not going to be available forever. If things get too crazy and things do get a chance to get crazy, we're going to shut it down immediately. And there's going to be no soup for you. So if you're ready to take advantage of your first high flyer and take full advantage of today's special broadcast, click the link in the chat right now or go to rogerscott.com/club. If you prefer to speak to somebody, call 904-706-3539.
Well, Roger, as far as I'm concerned, there's no better way to target these $500 returns in the first 30 minutes of the morning using basic share. There's so many good things about this.
Roger, I don't like options. Okay, forget about options. Roger, I don't have a big account. Okay, forget about big account.
Roger, I can't watch trades all day.
Okay, I don't want to be correlated to the market.
Right.
I've taken all of your excuses away from you.
Yep.
And
then you split the payment in half.
And then I split the payment. Thank you. And I split the payment in half. And It's a proven. We've done nothing but win the last 4.5 months.
Yeah.
Look how excited I am about this program 4.5 months after we launched it.
And let's look at this guy. We had
Oh!
JZXN this morning.
I was going to say that's this
again.
morning, and Mark that his $538.
I love it. I love it.
Folks, that's this morning. That's this morning.
And that didn't even get to add that to the tally here. So this is a little bit higher now. But you guys can see the results speak for themselves. Real-time trade results, real people.
Yeah, and if you guys want lifetime, I'm sure that there's some offers.
We're gonna talk about that here.
We're gonna
Yeah.
okay, great. There's zero leverage and there's zero compound. I'm not compounding.
If you
every-
compound that, it's probably close to 100 grand.
You're gonna do real well if you compound.
Now, it's your consistency with these results is why so many of the top students write in each day. Roger, I think there's probably 250 to 300 that I saw just from the last few weeks. I only got to grab a few to share here. Don G
He
said,
said, "Hey, can you send me some testimonials on high flyers?"
I broke my computer.
I'm like, where do you want me to start? Like, where do you want me to start on this?
Yeah.
Yeah,
It's a game changer. Raymond here, 20% under an hour.
I like that.
I love it right there.
I like
YA. Look at this. Made $1,500 this morning on PMAX. High flyers are flying.
Yep.
Donna K, 45% in 12 minutes. Gary R, he's taken 8 trades, only lost on one of them.
I like that. I like the way that sounds.
Stan C, he made $460 in 3 minutes and 4 seconds. He must have timed it with a stopwatch.
Yep.
So if you guys would like to tag along each and every day, guys, click that link in the chat or go to rogerscott.com/club to get started here. You can give us a call at the number you see there at the top of the screen.
And you don't have to get started with $5,000. You can get started with $100.
Yep.
You remember, the average cost is $2 a stock. You don't need a lot of money to get started. All right. You can also call 904-706-3539. And don't forget, today we're splitting the payments in half. $9.99 today, with the other half automatically billed just 30 days later.
Very generous.
Graham, that's exactly right. However, I do have some special up my sleeve for anyone who joins today.
Special.
I'm pulling a rabbit out of my hat.
Uh-oh.
If you like even more savings, I have one more special perk for you. It's a way to save an additional $500. Ooh. Once you'll be redirected to the second page. On that page, you can choose to make that second and final payment today, instead of a month from now, right? Yeah.
Mm-hmm.
If you do that, I'll slash an additional $500 off your total membership cost.
Another $500 off.
Yeah, because I want folks to have this program. It effectively takes your subscription down to $14.98 per year. Folks, think about what I'm pulling on you here. This is fantastic. Now, obviously, this is not mandatory, but I did want to offer this special savings for anyone who wants to go all in with me on this special price. Again, this deal is only for today's charter members. So if you haven't clicked the link in the chat, you should do that now. In the meantime, Gramster and I will answer some of the most common questions.
Yeah. Let's start with this one. How much does it cost to take the average?
You and I should have done the average of the price, but looking at it, it looked like it was about $2.
Maybe $1.75, $2.
I'm going to go
25.
Yeah, I'm going to go on a limb. And say it's about $2.
We're not talking options $2. That's $200. No, this is like legitimate $2 single dollar bills.
Yeah, for the stock.
Right.
Yeah, and if you want to start with one share, you could start with one share. Folks, you could start with literally with $50 per trade if you really wanted to just kind of paper trade it and try it out. We do a trade every day. We don't always get filled, but on average we do a trade a day, and sometimes we do 2 trades. I would say on average there's a trade per day. On average, there's a trade per day. Most of these. So think about this: we've had 90 trades, and we've been in it 4 months. There's 2 months. Every month has 20 trading days. That's 80 trades. So we've done right around the trade a day every single day, including today. We'll talk about lifetime in just a second. Mm-hmm. Most of these stocks are under $5. Most of them are about $1.50, $2.50. And that's perfect if you have a small account. You can easily gobble up a few hundred or a few thousand shares without breaking the bank and still target our 500 daily goal. Okay? Just like what happened in the second week of April, which was one of our best weeks. Anyone who took each signal could have banked an extra $3,559 in 1 week.
And that's just 5 trades. We're not talking 100 trades. 5 trades.
5 trades.
$500 in a week.
You started the week with $5,000. Now you have an extra $3,500 in 1 week.
I feel like I've seen that number a few times. It's very, very consistent.
We consistently make $3,500 when we're right. Yeah. No leverage, folks. Yep. No margin. No monkey business. Even if you only started with half as much, that's still $1,779 in just a few days. That's good money. enough to cover the full membership if you take action on the second payment discount right now. Okay.
Yeah. Well, next up, do we need any special brokerages? Nope. I don't think so.
No, you don't need any special brokerages, but every broker at one time, like once every 10, 15 trades, every broker will restrict one ticker. That's just what they do. Like beginning of this year, all the stocks were good with Webull. Everything Webull was like every trade, and now they're having a few stocks.
Oh, really?
Yeah, because some of these, every stock will have some issue with a certain broker. So usually, what I recommend for folks, and I've done some research on this, TradeStation is really good. Thinkorswim is really good. Webull is really good, and actually, the one that started it all, the big one, the Robinhood.
Oh.
All these small brokers, they are very, very most of the people who open accounts there do these small stocks. But the one that I've heard consistently the best feedback has been TradeStation and Thinkorswim. Now, there's another reason why I like TradeStation and Thinkorswim. OTO orders, one cancels the other. You could put a double bracket. It'll hit your stop loss, cancel your profit target.
That's perfect.
Hit your profit target, cancel your stop loss. Thinkorswim has that. It has, you know, how you can do the OC on the bottom. You could do them. Yeah. So again, your regular brokerage is just fine. You could use a regular brokerage with this. Yeah. Yeah. Any regular brokerage is fine. Again, every broker, no matter who it is going to at one time restrict one of these small caps. It's just a numbers game. But the odds are, if you have two different accounts, then it'll just restrict one. But again, 1 in every 10 trades. We do trades every day. Just let them restrict it. Just move on to the next trade. Not a big deal. Yeah, you could do this in your 401k or IRA. As a matter of fact, I do this in my Fidelity 401k all the time.
Perfect.
Yeah, there's no restrictions. You're buying listed stocks and you're going long. Okay, you're buying listed stocks and you're going long. Now, as again, there's a few brokerages I prefer, and as I told you, I prefer TradeStation, Thinkorswim, Webull, and Robinhood. Those are the ones I prefer because I know they work really, really well.
Awesome. Any special account permissions?
No. Well. You know what? Yeah, Thinkorswim. You have to call them and tell them you're going to be doing small caps.
Oh, really?
Yeah, they started in January this year.
Interesting.
Yeah, they started a thing where they were restricting people, and they developed a reputation called getting schwabbed. That's what it's called. If you go to Reddit, it's called I'm getting schwabbed. And then January 1st, they came out with a thing that says you need to just call us. And I think now they have a note you can just click that says it won't let you. And it says you need to read this, record a message live, or just depending on your account. But that's the only thing. It takes a second to do. No, we're not, Charles. We're not risking $10 to make $1. I don't think you missed the whole thing. You missed it, my friend. Do I need special account permission? No, you don't. Because we're trading basic shares. We're usually risking 1-to-1. 1-to-1 is what we're risking. So if we're risking $500, we want to make $500. If we're going to risk 1,000, we're going to make 1,000. But our win rate is not 50-50. It's above. Right. It's much higher than that. Are there any additional classes? Yes, there is an additional classes. I need to show you specifically how to how to set your stop loss levels based on the share size. You see, because we know where your stop loss is going to be, we can adjust your stop loss based on the shares to give you almost down to $1 how much you're going to lose if the trade goes against you. And I'm going to show you how to do that. It's a very simple formula. You basically take the risk level and the price of the stock, and that's all you got to do. It's just two components. Very, very easy. No, E-Trade is not a problem. Bob uses E-Trade. He loves it. The whole process is covered fully in the masterclass. I'll walk you through the scanner step by step. Plus, I'll show you 2 more strategies we've been using, even more trades. This is a game changer. It's not only the bonus material that I have for you, but we also have the automatic exit plan, which is very important. When we enter a new trade, I'll teach you how to simultaneously set your protective profits order to help you close them out automatically. That way you can get the true automated experience with these high flyers. Is there a lifetime membership?
A lot of people asking this one.
Yes, there is. You can upgrade to lifetime status if you take me up on the second payment discount today. If you take me up on the second payment, on the next page, it'll ask you if you want a lifetime. You got it. If you get on the second payment, it'll give you a discount price for a lifetime.
There you go. Oh, and then Raleigh just posted, if you guys want to call in, Look
Yeah.
up lifetime.
Yeah, lifetime is 34.96, which is highly recommended. Because folks, I'm not going anywhere with this program. And if you currently have a year, I would highly recommend you upgrade to lifetime because this program is just getting started. I've only been doing it for 4 months, and this is the first webinar I've had since I launched it. So I don't do webinars on this program very often, and I wanted to show you how cool it is. And I wanted to show you how profitable it can be and how fun it could be. I figured if I could do that, you guys would love it. And folks, our profit factor is almost 2. Remember, the most important thing is your profit factor and how often you can rinse and repeat. We're rinsing and repeating every single day. You understand? Very important. And the deal for lifetime is so good that it'll actually save you money by the time your first membership is up. How long do we hold each trade? Oh boy. Very long time.
Yeah, they don't know this one. They may need to watch it all over again.
Maybe 15 minutes, 30 minutes. Not very long. They're always day trades. They're always day trades. And I typically get out by the end of the day, within the first half an hour.
Yeah.
I've never held a trade the entire day.
Really?
Never.
No surprise.
I've never held a trade in one day. Please don't recommend Robinhood. You could trade without OCU. You could still do one and then just cancel the other. You could still do it with Robinhood just fine. Yeah, it's fine. Don says, I'm so glad I'm Diamond member.
Oh,
perfect.
true.
Yep.
That's the way to go.
Yep. Of course, you don't have to monitor the trades like a hawk. Each entry is also accommodated with a profit target and stop loss. Most folks who trade these, they actually watch them as they're doing because they're fast, but you don't have to. And if you're worried about the PTD rule, SEC is changing the guidelines in like a week and a half.
Yeah.
I would actually start paper trading this now.
You get some practice.
Yeah, because in 2 weeks it's going to happen.
Yeah,
it's going to happen. That means
But
no one should be
you can
left.
trade them in a cash account now.
Yeah. Oh yeah. You can. And now
That's for margin.
Yeah, and remember, they're now settling cash accounts every day. They're not settling them in 4 days. They've completely stopped doing that. Thank you, Raleigh. Yeah, you could trade them right now in a cash account. You don't have to wait for anything, and you don't need a lot of money for this. You really don't. Folks, I've made this really straightforward and easy. So if you'd like to join, click the link in the chat. Now, if you have remaining questions, we're going to answer them right now.
Yeah.
Raleigh, can you just give me 1 second? I have to just for literally 30 seconds stop by the boys' room.
All right, you do that. I'll stay here.
Yeah. Just give me...
Okay, I tell you what, Graham, I think you can answer some of these because we have a lot of questions that come up. So earlier on, there was a clarification. Is this just regular stocks? Are these penny stocks or what?
They are just regular stocks. They're not over the counter. They're not Canadian, weird. You have to get some weird. The regular stocks you access in any regular brokerage. They do fall under. Typically, people will call them penny stocks, under $5 most of the time. Very, very cheap. They move very fast. That's why he doesn't use options. He's saying, why if a stock's gonna go from $1 to $2, I don't need to add options on top of that because the stock already moves so fast.
Exactly. And I think the key is these are not OTR stocks. All of these stocks are registered with the New York Stock Exchange or NASDAQ.
That's
so
exactly
they just happen to be cheap stocks, okay? But they are not penny stocks as we think about those boiler room situations where people are pushing OTR stocks on you by any stretch of the imagination. Let's see. Another question that came up was, let me see. So you
to get back.
Okay. Thank you. I appreciate
thank you. And thank everyone. Please join. You're not going to regret it.
No.
If you're in my 60-minute income program, this will be fun. You'll get maybe a chance to make $500 with you,
and then
come over to my trade.
Yeah, I love it.
Awesome.
I love it. Thank you, sir.
Yeah,
thank you for being here. I appreciate it.
Thanks,
all right.
Graham.
Oh, that was great. Thank you for I really do appreciate it. Graham is great, guys. We love Grahamster.
Some other questions here. I'll feed them to you.
Yes.
So one question. Several people were wondering. So you use a stop order to enter the trade, not a market order or a limit.
No.
It's a stop order, right?
It's always a stop order. It's a stop order to exit the trade. It's a stop order to take profit or loss, and it's a limit order to take profit. So buy stop, sell stop to liquidate, limit order profit target. And also, can you hear me okay right now? I had to adjust my mic.
Yeah, I hear you just fine. You're fine.
Okay, great. So let me just move this here. So here's how it works. It's really easy and straightforward, okay? So I give you an entry, a buy stop, and I give you a profit target. Your initial stop loss is the difference between your entry and your profit target subtracting from your entry. So let me give you an example. Let's say I buy stop at $10, profit target 11. Just I'm making this up, right?
Uh-huh.
What's the difference between 10 and 11?
$1.
Okay, I take $1 and I subtract it from 10. $9 my stop is my so here's how it works, guys. Your profit target and your stop loss are 1-to-1 initially. Once we're in the trade, I send you a telegram and I say adjust your profit target higher. As the trade goes our way, we raise our stop loss. So what happens is this. It starts creating a symmetric risk, because what happens is, in this example, let's say you have a $100 profit target, $100 stop loss. 11 is profit, 9 is stop loss, 10 is entry, right?
Yep.
Well, after the trade goes from $10 to say $10.20, we would raise our stop loss from $9 to $9.50. Then the trade goes to $10.80, let's say. I would raise my stop loss to $9.80. So if my profit starts off as equal up and down, but by the time I'm taking profit, my stop loss is almost at break even.
Yep.
So I start off with a symmetrical risk reward, and I keep moving my stop loss higher as this trade goes into profit. So if it goes against me, eventually I'm going to lose a lot less than I'm risking. So my job is to all I'm doing in this trade is watching my risk and protecting my risk. The profits take care of themselves. So what I'm doing is I'm using a stop loss, but I'm not trailing it like automatically. I'm saying, okay, put your stop loss here. Okay. All right. Move your stop loss now to this level. And we're always moving it up. We don't move it down. We never move it down. It's only up.
Right.
And so we create asymmetric risk by creating a profit and a stop loss and then raising that stop loss. So what starts out as 500 on the top, 500 on the bottom becomes 500 on top, 100 on the bottom.
Yep.
And it just works that way. And I wanted to make sure it worked. So I did this myself for about 2 years. And then I launched the program. And since we launched the program, we have there hasn't been one difference between our tested results and our actual results. I mean, it's been fantastic. And we've done almost 100 trades. So, and we've been at it for 4 months already. And we've had a pretty nasty market during this time as well. And nothing changed.
And nothing has changed. Yep.
All you're doing is entering a buy stop, a limit order for your profit target, and which never changes, and your stop loss and your profit target are equal distance. And then we start raising the profit target as the trade moves our way, or we take profit. And if we take profit, we just cancel the other orders. That's it. That's it. Every trade is designed that way. There's no, we don't move stop if orders pre-filled. We wait till we're filled. So what we're doing is this: we're waiting for the order to fill, and we're waiting for the trade to create a base, and then we raise the stop loss down up to that base. What I'm doing is I'm using a 1-minute chart, a 15-minute chart, and an hourly chart. The 1-minute chart used for stop loss and confirmations. The 15-minute is used for my profit targets, and the hourly is used for volume. So I'm using and I show you and I teach you all this. Mm-hmm. You could do this. You could do this yourself if you want to. I mean, it's you'll have to set up a screener. You'll have to have a good screener to which I'm going to be adding a screener, not to this, but I'm going to have a screener for it. But the point is, we only look for stocks that are showing their biggest potential catalyst for the day. So basically, I'm trading a stock the day that it's having its best day ever. That's why I've been able to trade this way, because those moves are very directional and we have a lot of panic and we get a lot of squeezes. To explain this to you guys in a very, very easy, let me explain this in a very simple way you guys will be able to understand. Uncle Roger has been able to identify low float stocks that are subject to a lot of that have a very, very heavy short interest. So what happens is, when these stocks come out with a news that's the best news they've ever had, you have a whole bunch of people who are bag holders as the stock goes down going, oh shit. And what happens is they're getting out, and by the squeeze, they're getting out and out and out as it goes higher. You understand? That's all I'm doing. I'm finding bag holders, levels where there's bag holders and volume, and I'm finding levels where they pass those levels, where short sellers have no choice but to cover, or they're going to get a margin call, or the broker's going to just liquidate them. We're never going to trade overnight. I've done that. This is not an overnight program. This is a program that holds trades for half an hour. There's no puts, there's no straddles, there's no calls, there's no strike prices, there's no implied volatility, there's no theta, there's no there's nothing except buy the stock, the ticker symbol, and the stock. That's it. I don't
Yes.
trade before market opens. I want to
So,
see the
but
highest
Roger,
volume.
let me stop you
Yeah,
for a minute.
yeah, yeah,
There
yeah,
were a
yeah.
lot of questions about that.
Yes.
And I think the best way to look at this is that in the pre-market, you already have a pretty good idea as to which stocks are setting up.
Yes.
And you give a pre-market heads up to people that, look, we're looking at this stock. This is what the entry target would be. This is what our profit would be. So it's a heads up. But nobody is entering this trade pre-market, folks. And even after the market opens, you're going to wait for Roger to give you the alert to get into the trade. But at least you know in advance what he's looking at.
Yes. Yeah. And I'm looking at the stock from 8:30 in the morning. I have a scanner set up, and my scanner tells me the days these stocks have their biggest volume. So and I track them for the day they have their biggest volume
Yep.
and for 5 days afterwards. Okay. So once a stock is on my watch list, it stays there for 5 days. Different buy levels. The buy levels change. But so the reason I can't buy the stock overnight is before the market opens is because there's too much manipulation going on before the market opens. Volume is not heavy enough. So I need to make sure that the price after the market opens trades above all that pre-market bullshit. Excuse my French. I want to bypass all that noise because it's very easy to manipulate a $2 stock before the market opens, but it's not that easy to manipulate it after the market opens. So what I'm looking for is, so if you guys want, this is I want to be completely transparent with you. I look for flags. I look for flagging patterns with the highest volume. And I keep track of those stocks for 5 days. And sometimes I look for the day it happens. And sometimes I'll take a stock over the next 5 days that it happened. If it takes out that price, I only trade during the session. Trading pre-market session is very dangerous because it's very easy to get manipulated. It's very easy to it's very, very easy to buy into a false move. Does that make sense?
Mm-hmm.
Can this be used at different times throughout the day? Matt, it usually. So here's how it shakes out. 80% of the time, we get the entry within 15 minutes after the market opens, and we get the exit within half an hour. 20% of the time, we'll put the order during the day, and just all of a sudden, I'll get an email. Hey, Roger, one of your stocks triggered. And I'll be like, oh, shit, it already triggered. So 80% of the time, most of your action is going to be in the morning. The rest of the time, you don't have to do anything. Your order will be just pending, just sitting there. But it'll come afterwards. It'll come at like 2 o'clock or 3 o'clock or 4. But that's like 20% of the time. Majority of the time, first thing in the morning. That's just how.
Good old market navigator every time.
I've done that. This is not a.
I'm gonna pause it. All right, folks. Thanks so much for being here this morning on the opening playbook. I know Dave was here to start things out, but I popped in because he had to take off and run. So I only have a couple minutes here before I'm gonna have to take off. Are there any questions that I could help answer? The chat's unpaused, but I only have just a couple minutes before I have to hop back over to Market Masters and help out Jack and Jeffrey. So if there's any questions, I would love to be of assistance, get you guys any answers you're looking for. But Roger did put his email in the chat. I'll throw it in there one more time. So there's that. Anything you guys can think of, just let me know. More than happy to help. But links in the chat. $9.99 due today. This is super hot right now, so take advantage of it. Seriously, guys, take major advantage of this wonderful offer that's in front of you. You do not want to miss this opportunity, guys. It's not going to be around for long. Okay. Looks like you guys are all set. So here's the thing. I'm not going to tarry. I'm going to let you guys get to it. Links in the chat. Give us a call, 904-706-3539. Any other questions, just shoot Roger an email. We will see you guys in about, an hour for Lance Ippolito and Christian. They'll be on doing Stonk Mania. So thanks, guys, so much for being here. And Dave, we'll see you guys tonight, this afternoon, on the old closing playbook. So while I get the room ready for Stonk Mania, you guys do your thing. Here we go. So, ready to go. All right, folks. No questions in the chat. Have a good one. We'll see you guys on the next one. Adios.